it's really important to have a plan and understand what your goals are.
In fact, my camel out there is suffering right now with a broken back.
So I actually found Pepe when it was only a couple of hours old, and I'm like, oh, this is a funny meme.
Oh my god.
Yo! Who is this DJ?
The old man is swing trading over years at a time. And it's like, that's where the real money is made.
The answer is a permanent loss. With single-sided staking, you don't have to worry about a permanent loss.
But really, at the end of the day, it's just a matter of a macro market. It's just what happens.
If you're aware, if you're disciplined, you can hone that into further financial growth.
Financial freedom, so we can actually live life and not have to be constantly living paycheck to paycheck. I mean, that's the ultimate goal, more or less, right?
Ladies and gentlemen, boys and girls, crypto degenerates, ducks and squirrels, welcome to this Sunday flagship show of the DGen Roundtable. I am your host for tonight. My name is Will Stevenson. I'm an iron worker who travels the states building TV towers, and in my free time, I like to talk cryptocurrency and self-improvement to degenerates such as these fine gentlemen here and you in the audience as well. Welcome to our stream tonight. We got a bunch of things we want to talk about. Joining me tonight is Zenith, the DGen Roundtable's I didn't. Oh man, I had it.
And legal analyst. I pay attention to all the stuff going on in DC and how it affects the rest of us, and try to give you the best and easiest interpretation possible.
There you go.
Ooh, that's good copywriting. And we also are joined by Agent J, the group's great value technical analyst. Welcome, gentlemen, to the stream. Welcome to the show. Welcome all you guys at home. What's new and exciting with all of you guys? Starting with Zenith. What's up, bro?
Not much, just getting back into the swing of things over here after our big Vegas trip. Been playing some golf here and there. Been doing a little bit of warhammering as well, so, you know, a lot of the same.
Ooh, excellent. Actually, I saw some Warhammer memes on Instagram today, and I thought about sending them over to you, and it was a bunch of orc stuff, but that's excellent. I like the Warhammer lore. I've never actually played the game. I know nothing about it, but I love the stories, and I love like the little videos, and I think there's a video game out for it now, something about like Space Marines or some shit like that, but that's a really cool little...
Yeah, that would be Space Marine 2. Very, very popular right now. Pretty good. I haven't finished the campaign, but I really enjoy it. And yeah, you're not wrong. Warhammer is some of the best lore out there. It's definitely more into the brutalist absurdism of a very dark future, but it's like, there's some good stories and some funny stuff.
Hell yeah, I like it. We might dive into that later on, or throw that into our anime chat.
More of a Whiskey Wednesday kind of thing.
Yeah, Whiskey Wednesday kind of stuff. But yeah, Agent J, broski, what's new and exciting with you? How you been?
I have been excellent, my friends. Very good to see you on our flagship Sunday episode. Speaking of Warhammer, I don't know, maybe you could confirm this one, Zenith. I heard that my favorite Superman, Henry Cavill, is actually collaborating to create a series. I'm not sure if it's going to be a Netflix series, a TV series, but not a Netflix, maybe HBO, or maybe a movie about Warhammer. Can you confirm or deny this?
Correct. Henry Cavill has been in the works with, I believe it's Amazon Prime, actually, is the one that's been trying to get this thing going. And he's a big Warhammer guy himself. He plays Custodes and enjoys the lore and whatnot. And he seems like a guy that actually cares about the game and the IP and wants to do it justice. There's been a lot of back and forth about him being willing to stay on the project because they've had like some creative differences over stuff. He's like, no, you guys are not doing this correctly. And they're just like, yeah, but we want to do it. And he's like, cool, then I'm out. And they're like, wait a minute. We need you back in here. So that is in the works. There's no official release date on anything, but that is a very accurate rumbling from the rumor mill about everything going on.
Gotcha. That's actually super cool, and I'm not surprised with Henry because if the rumor is it hasn't been confirmed, but I think this is a reasonable assumption that the reason why he left the Witcher project was because of the creative differences that he had with the producers of the show. And to kind of echo what Zenith said, the TLDR is they deviated significantly from the books, and Henry's like, no, you're not supposed to do that. This character would never do that. This would never happen. This is how this is supposed to go. And he's very he's very adamant about sticking extremely closely to the source material. And so I'm actually not surprised if the same kind of creative differences are rearing their ugly heads when it comes to Warhammer, especially since he is an avid player of the game, and he has been for a very long time. So I'm actually not too surprised there. Yeah.
Yeah, no,
I have a lot of
entirely accurate. Go
ahead, Z.
Brother.
I was just gonna say I got a lot of respect for Henry. There's not a lot of people that will tell a studio or tell the big like Hollywood machine like, hey, I'm not putting up with your disrespecting the lore, disrespecting the story, or anything like that, and like they'll walk away from a project. I had a lot of respect for him for walking away from Witcher because of that exact thing. I heard the same thing that you were talking about, Jay, that that they started deviating from the game, from the lore. And like, as an appreciator of stories myself, I don't like when other entities try and like shoehorn a character into their own little interpretation, into their own little world, rather than staying like canon to whatever the ethos of the story would be. So I got a lot of respect for Henry for that. And if he walks away from Warhammer, then it's like, it's a good reason to stop watching it. Like I stopped watching the Witcher on Netflix when they tried to take it a different direction, and he was like, I ain't about that. So it's he's a person that I have respect for, and like there's not a whole lot of that you see in the culture that's being put out by like the legacy production companies these days. So what were you going to say, Zenith?
It seems like it's probably more of just an issue with him fighting over the studio trying to produce it, because they probably have an idea of what they want, and they don't really know Warhammer very well. They just try to make what they want and slap an existing IP onto it, and it's like, yeah, that's not how this one works, boss. Not even close. Yeah. Especially with an IP like Warhammer. Like, you guys are going to have to get pretty comfortable with some rather uncomfortable ideas very quickly if you really want to make this thing. Because, fun fact, it is not a peaceful setting, and war crimes are the normal, like, pretty much just like standard fare of events.
Yeah.
Yep.
Yeah, they're going to have to really become comfortable with making people uncomfortable, because otherwise you're not going to get a very loyal adaptation. Let's just put it that way.
It's true. Yeah, it's also a very different uncomfortable, because I think some of the studios have been trying to push the message lately and all that crap. They're like, oh, we'll have like girls and dudes kissing on screen, not like opposite sex, but the same sex stuff. They're like, oh yeah, we'll be edgy in this way. It's like, no, brother. I need you to go look up what a demon Kalaba is, and then come back and talk to me about this. Then we can have that conversation.
Yep. Yeah.
And it's not really quite edgy if literally every other cinematic production company is doing the same edgy stuff, like, oh wow, same-sex marriage, oh my god, like somebody go crazy here. Like, it's I think that if they were to stick to the lore of the Warhammer, like, that would be the crazy thing to do.
Well, a lot of it depends on what you're going to focus on as well. So I guess not to get like too off topic here, but there's different parts of Warhammer that each have their own like weirdness and absurdism in their own way. If you stick to the Imperium of Man, which is kind of like the main characters, by the way, there are no good guys in Warhammer. You just got to get that out of the way very quickly. Like, one of the main institutions of the Imperium of Man is the Adeptus Sororitas, which is effectively just like the evil Catholic Church that purges heretics without a second thought if they were actually guilty or not.
Nice.
Like, they have war machines, which is like the cage with all the spikes facing inwards. It's those things that have been built into mechanized robots. Yeah, it's Iron Maidens that use the pain and suffering of the person inside to fuel the demon machine to get it going, to then go kill other people. It's crap like that. You have literal like chaos demons who are like warp entities that are created by like human suffering and anguish and negative thoughts. And then there's also chaos, which is the traitors, the defectors, the betrayers, and then all the different flavors. They also get turned to chaos and do some pretty crazy stuff. You can have some pretty tame stuff, which is like Iron Warriors, who just like, we like sieging stuff. And you can have other stuff like Emperor's Children, which is like, we like doing everything to the absolute massive amount of excess, including sex, drugs, and rock and roll all at the same time. It's like, oh, okay, that's not very PG.
Yeah. Might be a bit too much for the sensitive nature of the West at the current moment in time. Like, you're really gonna have to, you're gonna have to get comfortable with potentially either getting the show canned, or, I mean, even Amazon Prime not taking it, right? Because I mean,
Yeah, if I had to give a guess as to what they were going to do for a show, they're probably going to do something with either Imperial Guard or Space Marines, and they're going to be fighting probably the Tyranids, which is like hive mind alien invaders that consume all biomass and evolve continuously and then take over new planets. What were the bad guys from Mass Effect? What am I thinking of?
Oh, not the Geth, but the big giant squid machines. Fuck.
Yeah, similar concept. Either ways, let's not get detracted on that one.
Yeah.
It's either probably going to be Tyranids. I could see them also doing a little bit of the chaos stuff. I think like Zinch demons, which is like the demon god of change and forever changing. Like nothing is ever the same, and plans on plans on plans on plans.
Yeah.
That would probably be pretty good TV. Gene Stealer cults might be interesting. It's kind of like humans that like turn evil and just kind of become just like grotesque monsters. Not like grotesque, but just like turn against it. It's like, yeah, they have like secret, like imagine kind of like Illuminati style plans. It's like that's probably like pretty standard bad guys I could see for that show or something.
Dude, I kind of look forward to it. I'm gonna do a Whiskey Wednesday on Warhammer. Would you be interested in because like I know about nothing, like pretty close to next to nothing about it. So whenever we're not interviewing some guests or something, we'll have to put that off into the future. And on the subject, as a matter of fact, of Whiskey Wednesday, where we talk to the folks at home, it's time for that part of the stream where we do chat motherfucking shoutouts. The sun's pretty bright over here. I don't know if you guys can read it, but I promise that it says chat shoutouts on there. So Mrs. Producer, if you would be so kind as to go ahead and pull up some of these chat shoutouts. Let me see if I can read this. I'm facing like right into the sun right now, but it looks like, oh, hang on. I can't see anything. Have we got the ability to do, be right back. Zenith, do you happen to be in the production chair? Would you be able to
I'm
pull
not in
these up for
production
me?
chair.
Okay. That's fine. Well, let's talk a little bit more about some Warhammer stuff until Mrs. Producer gets back. I did not look at the private chats before I went to make that move. So oopsies. Shoot. You were talking about potential.
You want to talk about the
potential.
game? You want to talk about hobbying?
Yeah, so like what?
Lore?
Let's take a step back. There's probably a bunch of people watching who have never heard of or like thought about Warhammer 40K before. Is there like a couple sentence? Oh, okay, she's back. All right. Well, we'll do that some other time. We do it live, folks. We do it live. Mrs. Producer, would you be so kind as to pull up the first of the chat shoutouts for us, if you please? First and foremost, in the chats, we've got Mr. Moonpilled Rational Optics saying, "What's up, D-Gens? What's up to you too? Good, sir. Good to see you. Good real-life friend of mine, Moonpilled Rational Optics. An excellent gentleman. Welcome to the show, broski." Next up, we've got Kenturian54X. What's up, D-Gens? What's up, broski? It's our very favorite pilot, farmer, crypto investor, Mr. Centurion54X. Welcome to the stream, bro. Good to see you. He's also got another question here. Who's ready to take out a loan on their life insurance to buy this P-Dye dip? Oh, man, we will get into that after the chat shoutouts. Or actually, no, we'll get into that after we cover, after we do some technical analysis here. So we will make sure to do the show in the normal flow, and then we'll talk about some P-Dye here for you in a minute. Next up in the chat shoutouts, we've got Johnny saying Jemmy. My bad. I'm reading off of a very small cell phone screen right now. So we've got Jemmy saying, "Happy Sunday, D-Gens. Happy Sunday to you too, Jemmy. Good to see you. Welcome to the stream." After that, we've got Mr. Brown, Farmer J. I heard you guys were going deep into the P-Dye chart today. Agent J, would you be able to do some TA on P-Dye as we close out the TA section?
I promised Brown that we were going to do the TA for today.
Ooh.
So I will follow through on that promise. We did not get to
Very
it when
nice.
we did over the week because there was a ton of stuff to cover and I just didn't have the time for it for Brown. But I did promise him we were going to go over the P-Dye chart, so we shall do that later on in the evening.
Fantastic. I love to see it. And by the way, I have no idea when we're at the last of the chat shoutouts because I am on my phone right now. So someone just give me the signal or something when we come up to the last one. How many more do we got, Jay? For the chats? 2 more. Okay, excellent. Next up for the chat shoutouts, we've got Moonpilled Rational Optics again. Pump it up. It's the kids' first DRT stream. Shout out to Moonpilled Rational Optics showing DGen Roundtable to the children. We freaking love to see it, broski. I will try and keep a bit more tame of a mouthpiece on knowing that now. That's freaking sweet, dude. I love that. We're getting multi-generational here with the DGen Roundtable. So shout out to young Mr. Moonpilled Rational Optics. however old you might be, whatever place in the world you might be. We're here to talk about cryptocurrency, self-improvement, a little bit of Warhammer, and some technical analysis. So welcome, bro. It's good to see that the children are in here. Next up for the chat shoutouts, and finally, we've got Johnny Chaos Harlequins. What's up, Johnny? Good to see you, broski. I heard on one of Sami's streams that you removed yourself from Twitter, so it's good to see that you're still alive and that things are still great and going well. Welcome to the stream, broski. Glad to have you here.
Move.
Yeah,
very, very, very good move by Johnny, because we've said it here a few times. Crypto Twitter is where civil discourse goes to die, especially with the shenanigans happening right now within the RH ecosystem. It's probably best for your mental health, your emotional health, to just step the hell away and come back when it's time for risk assets to start pumping. So kudos to you.
I heartily agree, Agent J. And I go on Twitter to post something and to check notifications, and then I hop right off because I get depressed real quick, and it's like I don't need this negativity in my life. I'll see y'all later. Peace out. I'm gonna go hang out with the DGens over in Telegram. So that's what you got a thought, Zenith?
No, getting off Twitter is good. Touch grass regularly.
Excellent.
Please. Either that or touch a bench press. So one or the other, pick one.
Ooh, bench press. I like it. This is good. We're getting strong. I got a weight set here in the truck somewheres, but that's good stuff. And that was the final of the chat shoutouts, correct? Or have any more snuck in? All right, sweet. So
should be the last one.
That finishes up chat shoutouts. So I'm gonna go ahead and toss it over onto our great Mr. Technical Analyst, Agent J. Broski. Would you mind running the folks here through some charts and tell some stories?
Absolutely. Give me 1 second to share my screen really quickly. There we go.
All righty.
Okay, first and foremost, we're going to go over the Bitcoin 60-day cycles. I think we have convincingly had a cycle low here, day 57, for the last 60-day cycle, and we are currently in a brand new 60-day cycle with a high here on day number 9. So it is once again fair game for both the bears and the bulls. Whoever manages to take the momentum within the first half of the 60-day cycle will pretty much determine where we go for the rest of March, heading into late April and early May. At this point in time, the bulls are making a strong fight. They are giving us some bullish structure. I know it's a little bit difficult to see here on the daily, but when we're going to go over to the lower time frames, you can see that we are forming some bullish structures on the lower time frames. However, the only concern that I have for the bulls is at the current moment in time, as we're pushing up here in price, you're getting lower and lower and lower volume, which is not exactly what you want to see when you are starting to get bullish. However, to be fair, if we are at the very beginnings of a bullish structure, this is just your wave 1. And so we can hopefully at a later point in time, if we keep pushing up in price, we're going to get the volume candle to, at the very minimum, knock out the volume candle that we have here at the very early parts of the move around here. And then eventually we would actually like to take this volume candle up here around the very early parts of February, because as it stands, this is during a correction, and you haven't even knocked out that volume candle as of yet. But cautiously optimistic for the bulls. For those of you who have caught the Telegram streams, you know that even though we are starting to get some nice momentum on the lower time frames, the bears still have majority control of the market, and the onus of responsibility is on the bulls to prove otherwise, right? But we are cautiously optimistic. But me personally, every single move to the upside, I am going to assume is a counter trend rally until the bulls give me a reason to believe otherwise. So that does it for the current 60-day cycle. It would be very nice if we get a right translated cycle, because if we get rejected here and take out the last cycle low, it is very unlikely that if we take the cycle low sometime during next week or the week after, that we are going to have a 70-day plus left translated cycle with a high on day 7. It is just extremely unlikely based on probabilities, based on the data that Zenith, I'm sure, will comment on, that he has backtested, that we have not only a day 7 high, but an extended left translated cycle heading into the mid to high 70s, possibly into the 80s, right? And so the bad news is if we do knock out this cycle over here, we are going to roll over into lower prices, most likely all the way up until the very late weeks of April into early May. So let's hope that the bulls do have a strong showing in the first or I guess the latter half of April, of March here, heading into the very early parts of Q1. So let's take a look at some potential bearish and bullish scenarios. It's very simple for the bulls, actually, right? Because for the bulls, your correction has ended here, which means what you'd like to see over the coming few weeks heading into Q2 is quite simply continuation of the bullish structures that we have started to form, right? You want to see impulses start to form, right? Impulsive structures, right, with 3-wave corrections on the downside, and then continuation of the trend, right? Very simple for the bulls. Also, like I mentioned earlier, you would like to see moves to the upside like this, accompanied by volume along with the structure, right? So it's actually a very simple scenario for the bulls to keep pushing price up, to hold structure, to maintain support, and to actually have volume come in along with new higher highs. Because as it stands right now, you have decreasing amount of volume, and that's not exactly what we'd like to see on impulsive moves to the upside. For the bears have a few scenarios. I'm just going to go over the higher probability scenarios during the current moment in time. Let's go ahead and take off our cycle highs and lows. A WXY, this is one that we have been observing for quite some time now. The green count, WX, is already in, and we are looking for the completion of your Y, and that is going to be a contracting diagonal. Let's go over to the 4-hour chart to get a little bit better visual. Right, the contracting diagonal is as follows. You have a red count 1, 2, 3, and 4 already in, and we are looking for the 5 to come in. Your targets 4 to 5 are as follows. If you take a trend-based Fibonacci extension from the very start to the end of 3 to the end of 4, and you get your targets for 5. Your targets have to extend beyond the low of 3 here, because in a diagonal, your wave 5 cannot be truncated, which means it fails to go beyond the top of 3, or in this case, the bottom of 3, unlike a regular impulse, which can have a truncated wave 5. And so we do have to knock out the low of 3 here for the bears in order for diagonal to be confirmed. In particular, points of interest is the 786 Fibonacci here at 73,061, because that is very closely overlapping with our first area of weekly support back in 2024, right? That range that we consolidated in for a very big portion of 2024. The first level of weekly support at the top of that range is at 73,600. And so a very nice area of support for price if the bears somehow manage to push us down. The invalidation for this move is if you go beyond the 1-for-1 fib extension, because in the contracting diagonal, your 1 has to be greatest in magnitude, followed by 3, and then followed by 5. Your 5 has to be smallest in terms of magnitude. So if it goes beyond that 1-for-1 fib extension, you have now invalidated your diagonal. But as it stands, this is the highest probability scenario for the bears at the current moment in time. Now, let's go and actually do some analysis on a lower time frame, on the 1 hour. Let's take a look at the current bullish structures and or bearish structures forming for Bitcoin. Now, let's go and take a look at the bullish structure first, because we just went over the bearish one, right? We have an impulse in green, larger degree green already complete. Your 1 and 2 are already complete, and we are looking for a 3 to follow. Targets for your 3 are as follows. If we take a trend-based Fibonacci from the very start to the end of 1 to the end of 2, and you get your targets for 3. Interesting points of resistance is the 1-for-1 Fibonacci extension here, because that is in confluence with a weekly point of control at 89,861. Those tend to be respected in terms of either support or resistance. And so the 1-for-1 Fibonacci extension is a particular point of interest for us in terms of resistance. probably a good profit taking opportunity if you were so inclined to do so. Now, on the lower time frames, on the 15, right, we are looking for this impulse to complete, right? We are actually looking for this wave 3 to complete. You can see that we are pushing up here, volume coming in during the move, which is nice. However, the highest amount of volume is still over here in your wave 1. And so if this is indeed a continuation of the current trend, right, which is an uptrend, then you would like to see volume come in and eventually take out the volume candle here on your wave 1. Your targets 4 to 3 are as follows, right? Fib extension from the start to the end of 1 to the end of 2. And we actually have already very nicely punched through the 2 daily points of controls for Bitcoin, which is very nice. And I think during this move up, we actually just invalidated a worst case bearish scenario, which we will go over next. And so very, very good move for the bulls here to start off the week, because you have basically invalidated this bearish scenario that I was going to show you, right? Because this was a WXY double zigzag, and unfortunately, we just hit the invalidation, right? The invalidation for a double zigzag is the 0.7 fib retracement from the start to the end of W, and so this scenario is gone. So we can actually now delete it. Right. Now we have to look at alternative scenarios for the bears, and on the lower time frames, right, we are probably looking at either a flat, or we're looking for a more complex sideways structures, which is a WXY. As it stands, since price is still pushing to the upside, we are looking to continue the trend. And for the bears, let's see if we can find a structure. Take a fib retracement from the start to the end of that move. Let's turn on our targets for a flat. You'd at least like price to hit the 0.9 fib retracement. So let's actually do some live analysis here, right? So A, B, C, that could be a flat. So for a flat, you'd like this move to at least hit the 0.9 fib retracement level up to the 1.05, right? That would be the minimum for either a regular flat or an expanding flat or an irregular one, right? So it covers all 3 versions. And so you would actually like to hit the minimum of 0.9 for us to consider a flat. Now, if we were to look at maybe a more sideways corrective pattern, right? A WXY, I think we are actually much closer in hitting those levels. Let's go and see what the retracement levels are for our WXY. We have just hit it, right? We have hit the 786 minimum. And so as it stands, we just have to wait for structure to mature before we can really have a good idea of a bearish scenario, at least on the lower time frames, right? We have our bearish scenarios on the higher time frames, but as it stands, the bulls are continuing to push price to the upside. So we are in a wait and see moment. Right now, we are cautiously optimistic for the bulls because they are pushing price to the upside. So actually very good way to start the week and a very good way to end the Sunday evening here over at the DGen Roundtable. So those are your current bullish and bearish scenarios for Bitcoin at the current moment in time. We are looking for price to continue pushing a little bit higher. And then once this structure finishes and we start correcting, then we can have a good idea of what the potential bearish scenarios are for our smaller time frames. All right, but as it stands, we are bullish on the short term, right? Cautiously optimistic. Z, do you have anything to add?
I do. Let me pull up my stuff real quick. Alrighty, so here's what I'm looking at. As Jay mentioned previously, the possibility of an extended cycle is possible. I think it's highly unlikely. The reason that I think so is that we have a very strong contender for the cycle low. And at the same time, to go even lower than that would require a lot more downwards action. It is possible. So these 2 gray lines here, these are actually April 2nd. So there are tariffs coming into effect with China. These are reciprocal tariffs going on. And then we have everyone's favorite day, April 15th, aka tax day, that's when all your taxes are due. So those are the possible big days coming up when with regards to macro financials, with everything else I got going on right now. I'm looking at the moving averages. So this red line here, that's our 200-day moving average. Once again, we have been below the 200-day moving average. We've struggled to get back above it, but we actually have a pretty good contender here with our daily close that just happened about half an hour ago. Notably, we also have our 20-day moving average, which is our yellow line, and our 50-day, which is our orange line. So we've been below the 20-day for a good chunk of time now. And we've been well below the 50-day for a good chunk of time now as well. Pretty much back since mid-February or early February, effectively, even late January. But I've been trying to watch this 200-day moving average as trying to recover that, because if we can recover that, then we can start moving upwards. If we're going to stay below it, then that means that price is heavily suppressed right now. But the fact that we've broken out above the 20-day moving average is good. If we can get this daily candle, aka the next 24 hours, if we can get that to confirm and stay above both our 200 and our 20-day, those are going to be very, very good indicators in my mind for upwards momentum. The one thing I'm kind of disappointed to see is that our day 9 cycle high did not get back up and retest this 91.5 level, which has been a previous support level back when we had our last 2 cycles effectively. We stayed above it for a while, broke back down below it, and then we didn't even go up to retest that. So that's one of the things that's making me think that the upwards momentum is not quite there just yet. A day 9 cycle high for a 60-day cycle is well within the realm of possibility. If not, I would almost say closer to normal. It's definitely not that midpoint cycle high or even a right translated cycle, but it is entirely possible that this could be the high for the cycle and we have another down cycle effectively. I don't think that right now, based on where we are in the 4-year cycle, that's likely, because at this point we need to start building momentum towards the upside to continue to hold that macro 4-year cycle. That's what I'm looking at. As far as RSI goes, everything is kind of in incongruence right now. They're all lining up. They're all doing the similar thing, which is that RSI is starting to come up. Our short-term average is higher than our longer-term average, which means that we should continue to have upwards momentum, especially considering we came down and retested it once, twice, 3 times, and we almost had a 4th here, but it stayed well above it. So that's good news for me in that regards. I want to believe that price is going to go up because we all want price to go up, but at the same time, ignoring my personal sentiment and how I feel about it and what I want to see happen, what I'm seeing happen, or what I understand from the macro 4-year cycle is we need to be going up, and I think that this is a good candidate for cycles to start going up, especially now that we're getting good economic indicators from maintaining unemployment levels and inflation. We actually had a really good inflation print this last month at 2.7%, I believe. So that is excellent news. Obviously, it's still higher than the 2% that we all would like to get back to and hopefully get back under at some point. But as it stands right now, I think we have some good economic data coming in. There is more turbulence in the market coming up, which means volatility is still going to be high. We've seen that we've had some pretty large candles both directions, even back-to-back days. Like here on Wednesday and Thursday of last week, we had a big up and then pretty much just lost everything. And then also back in early March, we had a lot of up, immediate down, a lot of down, immediate up kind of. So volatility is still high at this point, but as it stands right now, personally, I'm leaning more on the bullish than bearish side of the house, especially when it comes to the 60-day cycle coming up. So I do believe there's a good chance we're going to make a new cycle high. At worst, I think we're probably going to come up and retest this 91.5 level. I think that is a strong area that we have to either break through or it's going to be respected and we're going to bounce down off of it.
So the 90,000 area is a very particular point of it's an interesting point of resistance for me, because that's like you outlined there, right? It was a prior range low support, but we also have a point of control there on our prior range high. So 90,000 is in confluence with a lot of my fibs, even some of my bearish scenarios where on the move up it's still corrective. They tend to terminate around that $90,000 level, which is very nice because there's a point of control there. There's strong horizontal resistance there. And so I think that once we get back up to 90K, I think you're probably going to test that at least once or twice and get rejected there before either continuation to the upside or getting confirmation that we're going to get rejected and we're going to head back down. So I think we're going to get back up to that $90,000 level here within the next 1 or 2 weeks, probably, right?
I agree. I think one of the things that I know I focus on this more than you do, but one of the things I'm really looking out for is any of the crosses between the major moving averages. So it looks like we're kind of converging on this single point right around that April 2nd timeline, where the 50-day is looking like it's coming down there, the 200-day is moving up towards there, and the 20-day is somewhere between the two. If we can get these moving averages to kind of normalize more and actually start stacking properly, either direction, which the downwards direction would be unfortunate, but that would be more in alignment with what we normally see between the averages. Like something back here when we had this like really bullish area, we have the 20 above the 50 and the 50 above the 200. And then conversely, over here, when we had this big cycle down, we had the 20 below the 50 and the 50 below the 200. That shows market direction moving in the same direction. Pretty much for the last 2 months, effectively, we've had some confusion between the 20 and the 50, and now even the 20 dropped below the 200 3 days ago. That is on the Saturday, the 22nd of March. Obviously, crypto markets are 24/7, baby, and that's one of the things that we love about it. But I think that the moving averages are showing me we're going to come to some sort of crossing or some sort of major point where we're going to notice a move in a certain direction that should hopefully identify which direction the overall crypto market is going to start heading in the more medium term, shall we say.
Mm-hmm. Let's just hope that that 50 doesn't go below the 200, because that would be a shot to the heart. That's for sure.
I agree with you. I really do. If the 50 drops below the 200-day moving average, then that is an indicator that everything is alignment towards the downside. If we can get the 20 back above the 200 and also back above the 50, that would be an indicator that we're going to be moving towards the upside along that medium term. So think more like 2-3 months at a time kind of thing.
Mm-hmm. At the very minimum, we are, like you mentioned earlier, getting a close above the 200-day, which is good because that's exactly where you want to stay above during a bull market. So let's just hope that we are going to continue building momentum above the 200-day, because otherwise, then you do risk that 50 coming down a little bit more, and then eventually it crosses, and then you're in even more bear market territory than the normal. So.
Agreed. And then as a bit of a note, again, folks at home, please remember, read the banner below. Different banner. Nothing we give is financial advice here. But I will say, anytime that we've spent a little bit of time below that 200-day moving average, especially in a bull market, that is a good opportunity statistically to buy, because it means that there's usually going to be some upwards action coming on soon. So if you bought down here in this 60 to 50K range, that was a pretty good chance to buy, considering that it effectively did a 2x coming up here, all when we topped out at about 108 and 109. And then again, if we continued back down, the last time we were below the 200-day moving average was down here in August, September, October of 2023, and then we had the massive move to the upside where we ran pretty good, and that was pretty much a 4x effectively on that one. So whenever it's below the 200-day moving average, statistically, it's a pretty good chance to buy, especially if you're looking to swing trade it over the next couple of months, or waiting for it to start breaking down again and start getting below those 20 and 50-day moving averages as a potential sell option for those kind of moves. If that is your strategy and that's what you're targeting, this is one of those indicators that can show you this is one of those things for your strategy that you've identified, which is trying to buy below the 200-day and then sell once it starts to get closer to an area where it starts dropping below that 50-day. Those are good indicators of that kind of strategy working.
Yep.
Again, that is trading. That is more of a trading strategy. That is not a long-term buy and hold investment strategy. Yeah. So if you're someone that likes doing a trading strategy, that's one of the ways and one of the opportunities that's kind of happening right now. And we're starting to leave that area. So if we do get confirmation that we're breaking out of this and start moving towards the upside, it means that buy opportunity has started to close out, and you can start looking at the next area to start taking some profits. Again, though, not financial advice. And again, if this is your strategy, then pay attention to that. Don't just trade on a whim because you feel like some guys on the internet said, "Oh, it's a great time to buy." It's like that's not how this works.
Well, statistically speaking, like you said, any time we spend underneath the 200-day moving average is historically speaking on during a bull market a good time to buy. And you can also see that that's also reflective of other indicators that tell you it's a good time to buy. When we spend a significant amount of time during below the 200, usually the fear and greed is also hovering around like the 20s. We were at 10 not too long ago, below the 30s, usually a good time to buy. Momentum is usually rock bottom. If you can see on the daily RSI, weekly RSIs, right, we are in the oversold regions. Historically speaking, good times to buy when we hit that oversold area, especially for Bitcoin. And so there's always, it's not just a singular variable that we consider that tells us it's a good time to buy. Usually there's a chunk, like a handful, a basket of variables that usually line up with each other that tells a lot of the market that pay attention to it that it's usually a good time to buy, because they almost always line up together.
I would agree. I guess I do. Apologies to Mrs. Producer for the constant up down, but do have one more screen share. I had to switch over to the browser instead, so that's why that's going on here. So if you don't mind. Already, crypto fear and greed index. We mentioned it just now. Right now, we're sitting about 45, just below the average. But notably, we are higher than last week, where we were at 32, and yesterday, even where we were at 30. And that's a decent jump towards the upside there. Looking at the 3-month, again, a lot of volatility on the greed fear index, but pretty much ever since end of February, we've been largely below it, and we really have not recovered that area. We've shot up to this 45 area before, and almost taken 50 here on the 20th of March. I believe that was 3 days ago. Yep, when we hit 49. So sentiment is largely still down. It was a lot higher previously, because remember, this is when we hit new all-time highs, and even then, we only got all the way up to about 84. So as it goes right now, market is more towards fear than greed, so that's what's going on there. And then when it comes to our flows, so we have the Bitcoin ETF flows. We've had a good chunk of selling on the ETFs, and only in the last 5 days have we gotten some consecutive areas of purchasing. So that's what's going on with the macro markets when it comes to Bitcoin. Jay, any thoughts on the ETFs going on?
Not in particular. We just know that the ETF outflows have matched the downwards price action. But if I were to give some insight into the potential good times to buy, usually the ETFs also start the moves up are usually front run by the ETF. So they tend to have a habit of buying first. They always buy continuously regardless, but those out, like when we start getting heavy inflows in the ETFs, is usually a good indicator that price is going to move, at least for some time. It's going to start moving up.
I would agree. I think the flows definitely show that as well. So areas that we're talking about in particular are back in June of last year. We had some selling, had starting to buy more. Price moved up slightly. And then we kind of chopped sideways for a while there. But when they started buying up pretty big, we started seeing that run, and that's when we got that run all the way up to all-time highs in January. And again, what we're looking at is we've had a lot of downwards action, a lot of selling here going on, and then recently with this 5-day stint of consecutive green candles on the purchasing, there's a decent possibility that we're going to start to see that front-running effect happen and see that price start moving towards the upside. So again, this is one of those things that points me in the more bullish than bearish sentiment as it stands right now. Ready. You want to talk about Ethereum at
all? Yeah, we could certainly talk about Ethereum. I have my thoughts on Ethereum. Not really, and well, it's a technical. I have some thoughts on Ethereum, but not really anything to do with the chart. Although we can always tie it in. But go ahead and give the people an overview of the chart, and then I can I can talk about my thoughts on it.
Yeah. So, Ethereum. You of such little hope and much disappointment. Yeah, so we came all the way down to about $1,800 here. We're starting to move towards the upside, and to talk about the moving averages being in alignment, Ethereum is one of the charts that has shown that. So ever since we had the 50 cross below the 200-day moving average back on the 28th of February, we have been down and to the right. We're starting to get a little bit of motion towards the upside. So if Ethereum can, again, claim this 20-day moving average, because we have not maintained, or we have not been able to break above this 20-day moving average for a good chunk of time right now. But as it stands right now, we're looking like we're starting to get above it. The current daily candle is a hair above it right now. So if we get a confirmation of this candle, aka the next 24 hours, to stay above the 20-day moving average, that will be an indicator that we're going to start moving towards the upside. Until we get that confirmation, though, what are we famous for saying? We're going to assume that the trend holds until we get confirmation that it no longer does. So there you go. Yep. The trend as it stands right now is still down to the right until we get that confirmation. This is one of the first opportunities that we could get that confirmation. But again, if this green candle turns into a red one, the trend down to the right is going to continue to hold for Ethereum.
And we have a daily gap to be filled. Whether it will be filled, yet to be determined. But the market has a habit of filling those damn things.
Yeah.
Sooner or later.
It's true. Ethereum is kind of the backbone of the DeFi space. Bitcoin is the backbone of the overall crypto market, but Ethereum, a lot of things are built on that Ethereum virtual machine, the EVM. And until Ethereum starts to perform, I think a lot of those Ethereum-related assets are going to continue to follow Ethereum's general pattern and stay with that, as opposed to catching up with Bitcoin and the rest of the market in that regards.
Agreed. As far as the technicals on Ethereum for the chart, I've gone over this on the streams that we've done over the prior week. Anything below $2,000, in my personal opinion, is a good price for Ethereum. If the directional bias were to be confirmed, which means we're still heading down because the bears still have control of the market, then I have my orders around 1650 for Ethereum are still set. I already made some orders around 1850 and 1820. But if the market, if the bears keep the lead heading into Q2 and we get another left translated cycle, then I am pretty confident that we're most likely going to see sub $2,000 Ethereum again, in particular, probably around 1650. And then I will have my buy orders then. Now, I know that Ethereum has been kind of the end of every joke here. In particular, can you attribute some of the lackluster performance to the lackluster leadership the Ethereum Foundation has had? I think that's certainly fair. However, I don't think placing because people like to get in Vitalik, right? And people like to get in the Ethereum Foundation. You guys aren't doing enough. You should be taxing the L2s. Your roadmap is all out of whack. And you're focusing on things that you shouldn't be focusing on. Some of those things are probably true. Some are probably less. But I think a large contributor to Ethereum's lackluster performance in this 4-year cycle in particular is because the narrative predominantly has been for Bitcoin. I think we can all agree that the narrative has been predominantly Bitcoin. I think people will remember this cycle as the cycle for institutional money and worldwide global adoption for Bitcoin. Crypto, broadly speaking, but it's really been a Bitcoin heavy show. And outside of Bitcoin, only particular narratives have really gotten a boost, and only for short periods of time. Really, the only thing that has had a sustained rally in terms of other narratives that has achieved success are meme coins. And so, what do we know about traditional financial people that are investing in Bitcoin? What they tend to do is they tend to move within centralized exchanges, right? Centralized entities. They don't play in DeFi. And unfortunately for Ethereum, if you want Ethereum to succeed, not just in price, but in terms of the overall long-term health of the ecosystem, the L1 has to be used. And so it's very different compared to Ethereum's heyday in our last 4-year cycle, where the narrative was predominantly DeFi. And everybody was using the L1. Everybody was using Ethereum. Yes, Cardano, XRP, and Solana existed, but the lion's share of the activity belonged to Ethereum, and that reflected not just in the gas fees, but obviously the price chart reflected that as well. Right now, the L1 is barely being used, and then you talk about the meme coin narrative. Well, most of the meme coins existed in Solana, and so what's Solana? What's the run that Solana had during 2023 and into 2024 is reflective of what Ethereum did when it had massive amounts of usage in our last 4-year cycle, DeFi summer. And so I think a lot of the lackluster price performance for Ethereum this particular cycle is because nobody is really interested in using the L1. Yes, it still has the lion's share of the total value locked in all of DeFi when you compare it to EVM chains and even non-EVM chains, but the L1 just isn't being used as much as we would like it to be used. And you can actually see that here on Ultrasound Money. Unfortunately for Ethereum, the value proposition of ultrasound money has not really been it hasn't been fulfilled. The reason why people got excited during the transition from proof of work to proof of stake is because of the promise of ultrasound money, right? Bitcoin is sound money. It's a finite supply. You can't print it. But with Ethereum switching over to proof of stake, the more the L1 is used, the more Ethereum is going to be burned in the form of fees. And there's your ultrasound money narrative, because the price or the supply of Ethereum at a certain point in time is eventually going to become deflationary. And to be fair, post-merge, there was a point in time where Ethereum was deflationary and the supply was going down. But look at the supply as it currently stands. We have 120,633,451 Ethereum currently circulating in supply. Well, if we actually go down here a little bit lower and take a look at the supply of Ethereum post right around the merge. So right around the merge, that was like around, let's see, June, July. Right? So around June and July, just right around the merge, you could see that the supply of Ethereum was 119, call it 120 million. And so the supply of Ethereum as it currently stands is once again inflationary, a little bit higher than what it was pre-merge. And so it hasn't been able to fulfill the value prop of ultrasound money. Right, it's a reflection on why the Ethereum price has been so lackluster, is because nobody's interested in using the L1 at the current moment in time. The attention is on Bitcoin, and the attention is on other L1s, and the L2s that are built on Ethereum. Well, they're not really contributing to the burn to the degree that we wish they would. And so is this going to be par for the course for Ethereum? I don't think so. I think eventually when the narrative transitions from, okay, now we've got as much Bitcoin as we can, now we're a little bit more comfortable playing in DeFi, talking about the centralized entities, and they start adopting DeFi a little bit more, I think most of that adoption is going to be on Ethereum, and then you can see the chain being used more once again, and then you can see that burn start to kick in, and then you start seeing the supply of Ethereum become deflationary once again. We know that the damn thing works. It's just a matter of time. It's a wait. You have to be patient, because right now the attention is still on Bitcoin. But once the attention starts heavily shifting towards Ethereum, then you can get that parabolic increase that we all know Ethereum is capable of, and that we all wish that would have happened a little bit earlier on.
Agreed. Mrs. Producer, if you don't mind switching over to my screen. So on the weekly chart, Ethereum is looking like it's breaking down towards some of the levels that we've seen back in like early 2023. And we really haven't seen it since then, pretty much, because once we got above this area here in December of 2023, we're kind of off to the races for a while. Retracement, back off to the races, and now we've gotten all the way back through all those lovely support levels we were building, and now we're getting back towards that early 2023 era of levels going on. When we look at Solana is holding up very, very differently, and this chart actually shows that Solana is acting in a way very different than the rest of the market. Because if we go look over at Cardano, a lot of up and then down and then massive up and massive down again. If we go over to AVAX, early peaks, recovered it slightly, and then back down again. But Solana, on the other hand, like you were talking about, the use case for Solana has been meme coin trading this cycle. And I think that is one of the reasons why it has stayed at these higher levels for much, much longer and has not given back a lot of the gains that it made in mid to late 2023. So Solana, I think, is a bit of an outlier in that regards, which is that the rest of the market is starting to capitulate and break down again towards those lower levels. But Solana continues just to maintain this area above 100, like very, very, very strongly.
Yeah. It's a reflection of where people are playing. People right now are playing on Bitcoin, but or they're playing in Solana. Ethereum's time is eventually going to come. It's just a matter of when, not if.
Agreed.
Because we know that we don't have Solana ETFs yet, right? The institutions are packing their bags with Ethereum and Bitcoin. And so once they're satisfied with their Bitcoin holdings, well, and they get a bit more comfortable with the idea of DeFi, well, I think that's the goal, right? I think that's the goal next. It should be to get these institutions to become comfortable with the idea of DeFi, because once they start using it, then we could see the Ethereum price reflect that in kind.
Agreed. Till then, though, more time, more waiting, more.
You have to be DeFi. Like, they have to become DeFi native. The L1 has to be used. Otherwise, the burn is never going to kick in. Ethereum will never become ultrasound money, and the price will never reflect it.
I would agree. I think that if you're going off the DeFi narrative, a lot of the other chains that are selling themselves more as DeFi use and actually being used as DeFi, in my mind, the Phantom, now the Sonic chain, I think it's a very, very big example of that, which is that there's a lot of good DEXs being launched over there. There's a lot of people actually engaging in DeFi and using it for its intended purpose. And it's looking like it's doing pretty well, actually. I don't have their chart over on TradingView, but let me pull them up on CoinGecko. What we're seeing is that stuff. One of the things that I've been playing around a lot lately is the Shadow Exchange, another DeFi exchange over there on the Sonic network. And yeah, sure, they broke down to about like, what was it, 30, we'll call it 40 cents. Yeah, sure, that happened. But since then, it's been maintaining the price pretty well. And we're starting to see a lot of other stuff going on that chain, like Shadow also showing that it's able to hold those levels as well.
I really like the Shadow chart. We did an analysis for Shadow during the altcoin stream, I think last week, and man, Shadow has a pretty chart.
I would agree. This little dip right here actually happened when I was in Vegas and I was talking with Delica's Crypto. He's pretty close with the guy that runs the exchange, and he's like, dude, I'm deploying capital to try to hold this price up. And he said it hurt like hell when he was doing, but guess what? It worked. And it allowed for a bit of a little run up here to about 90 cents. And then sure, we're bouncing around a little bit, but it's stuff like that, which is people on these chains that are willing to actually support the chains and support DeFi. They're doing well, and they're holding, if not gaining, on the rest of the market.
Damn, shot to the heart. Did Hexacristo ever talk about supporting the Pulse chain price?
Hey, a little harder to do.
To be fair, I support the move the DCC made, because I'm gonna let's deploy capital on the that
wasn't DCC that did that. That was the Shadow founder that did that.
Yeah.
So
okay, gotcha.
Yeah,
I thought he said it was
just
DCC.
to specify.
Yeah.
No, he was talking to the guy about it, and the guy was like, "Yeah, this hurts like hell, but guess what? Well done." I believe $24 is the guy. Shout out to you, man. You made a great product. I think you're supporting it well, and I think the chart shows as much. So hats off to you, sir.
Yep. That's dude. If you want structure to hold, sometimes it is going to be up to these big whales in particular, right? The Shadow Dex founder to come in and support price. I think, to be honest with you, I think if the OA did not come in at these particular points in time to support price, Hex, for example, right, we would be much worse off in the Pulse chain ecosystem than where we currently are.
Agreed.
Yep.
All right. Is that enough technical talk for today?
Yeah, man.
Before we go too far away from the technical talk, we had a question from Farmer Brown about the calculation of the fear and greed index. Have you guys touched on that at all?
Not yet.
Yeah.
But
this is probably survey data.
Yeah, so it's a combination of things. Fear and greed is a softer metric. It's not a like mathematical calculation. It takes things into account to do their calculations, but the things that are being taken into account are more sentiment and survey based. And like they even do stuff like go look at social media and see what the sentiment is over there and try to put a grade on it. So it's a very subjective measurement about what's going on, but they try to make it more calculated by taking in a variety of sources. So volatility is a big one, momentum, volume is another one, social media sentiment, Bitcoin dominance, even Google Trends. They take Google Trends into account, and also, like we talked about, surveys. So it's a softer metric, but it's one of those ones that's watched by people, not as a hard trading metric, but as one of the tools in the tool belt that you use to understand what the overall market is feeling and in which way it seems to be going.
I would like to know if there is a chart out there somewhere, or like it could probably be manually done, but I would be curious to see how often investing on the fear and greed index chart like turns out to be profitable. If someone were to be, I don't know, like day trading or month trading based on fear and greed index sentiment.
I can tell you that, Will.
Yeah.
Historically speaking, when the fear and greed index is like around 10 to 20, usually price is also heavily capitulated. Usually price is sitting below 200-day moving average. Usually momentum is also a rock bottom, RSI is in the oversold area. And so all of those different variables line up with the fear and greed that tell you it's probably a good time to at least start taking shots. Maybe not the entire bag, but it's a good time to start reaccumulating. Right. So fear and greed, if you're going to use it as a singular metric, anytime it's like around 10, bro, it's not a bad time to start taking shots.
That's true. I've had a chance to talk to some of the people over in the crypto side of the house on Hustlers University or the Real World, and they have a different strategy than we have. They're more trading based, so trying to actually do short, medium, even long-term swing trades. And one of the things that they told me over there was that there's kind of actually an oxymoron, which is that when the fear and greed index is like above 80, that's usually a good time to make a trade because it indicates it's still going to continue towards the upside. And again, even if it's above 90, that's also another very strong indicator over there. If the fear greed index goes below 20, it's a decent one. But here's the oxymoron part, which is that it's actually less strong than if it's above 80 or 90. Those two are stronger than below 20. But the one point where it does reverse is that anytime the fear greed index goes below 10, that is the strongest indicator there, because that is more like an absolute bottom kind of thing. So again, they use more of a swing trading strategy as opposed to long-term investing. But I've had the opportunity to talk to some people over there, and that's the data they shared with me.
Neat.
Let's I was just going to say, let's not give these fear and greed index people too much power. I hope they're not watching this podcast and decide to start like doing some of their own trading themselves, using their own indicator.
It's a big market.
Yep,
I suppose so. But like, if they start feeding bad data, in order to get that's what I'm saying is like if they start ruining them, kind of like if you use your uncle as an indicator until he gets wise enough to the market that he's no longer a good indicator. It's like it's one of those. It's just one of those things. I suppose the world is always adapting, but fear and greed index people, if you're out there watching us right now, I appreciate everything that you do, and keep doing the exact same thing.
I understand your sentiment, but at the same time, it's such a large market. Believing that someone's specifically trying to like psyop you or give you bad advice to do the opposite to like trade off of you. The fact is that these markets are so large, and the amount of volume, the liquidity, it's also so large that trying to fight individual players like that, unless you're talking about like JP Morgan trying to screw over BlackRock or something, which by the way, they really wouldn't do because largely all controlled by the same people. But that's the kind of level you'd have to get to get that kind of like PvP situation going on. So I understand what you're talking about. That's absolutely a real thing in smaller market cap coins where there's lower liquidity, lower volume, and the amount of people playing the game is a lot smaller as well. So that's more of a PvP scenario in those kinds of markets as opposed to the larger crypto market, which we were referring to with the fear greed data we were talking about just a second ago.
Yeah.
Dude, you know what's a recent example, Z? Dude, the 40x bear whale over the weekend. He put a 40x short on Bitcoin, and a whole bunch of whales got together, pushed the price of Bitcoin up 1,000%. He added collateral, didn't get liquidated. These are like hundreds of millions of dollars that funneled into the market at once on a singular 15-minute candle, trying to liquidate this 40x whale. They couldn't do it. Market's too big. And he had collateral.
There you go. It's.
Did he win?
He did.
Yeah.
There's
snap.
early, but he won. I think his take profit was around $9 million.
Damn.
Fucking A.
There are levels
Big
to this,
balls.
baby. I wish to one day be in that end of the swimming pool, but as of right now, I'm still in the shallow end, the rather shallow end. I mean, that's the reality for most retail investors. The dream is to one day get to that level, but even if you are a highly, highly, highly successful retail investor, you're just not going to be able to muster the size of capital that larger institutions and major players, like almost governments and nation states, effectively are going to be able to muster. It's just it's a scale thing.
Yeah.
What do you mean when you say he had collateral? What does that?
He added
Did he have,
collateral
like-
to his position to push up his liquidation price, because he was liquidated at around, like, I think it was like 84 plus change. He added enough collateral to push his liquidation price to about like 86K plus change.
Gotcha.
Yep. Otherwise, goodbye millions and millions and millions of dollars.
Yeah,
It's true.
so he gambled and won. He put 40 million on the line and he won 9.
It was a 40x
Damn.
short. 40x short.
Oh,
40x.
40x.
So it's using
Okay.
leverage to multiply the effect of what you have. The downside of that is that your room for the downside error is also much, much reduced. So what we're talking about in this case is that the guy used a lot of leverage to try to get an outsized effect. And people, on the other hand, know that because he did that, there's less room on the opposite side of the trade for him to stay alive. But by having capital and, sorry, Jay, what was the term you used?
Collateral.
Collateral. Using collateral to back it up is one of the ways you can prevent yourself from getting liquidated and removed, because you're using a bunch of leverage, which is money you don't have. So if you go too far the wrong direction, the people that have effectively lent you that money will take it back from you unless you put up more collateral of your own to help support it, which in this case they did.
Yeah.
Okay.
Also, personal opinion, bad move putting the short on Sunday. I think it was either late Saturday or early Sunday. Bad move putting the short on a Sunday, because price was already headed in a downward trajectory. If he would have placed a short when market opened on Monday, I think he would have had less of a chance of getting liquidated, because then the pile-on, right, the dominoes falling to the downside would have had a higher chance of occurring, versus putting that short on the weekend, where it's like nobody else is trading crypto on the weekend besides us. So
Just crypto folks.
Right? And so you've now, like, your risk exposure to a whole bunch of whales getting together, pushing price up on a single 15-minute candle to liquidate you, higher chance of that happening on the weekend versus during the week, when the, like, dominoes have a chance of falling one after the other a lot faster, right? In either direction.
Why would the whales want to, like, what is the incentive for a whole bunch of randos to liquidate one guy? What do they get out of that scenario?
Because that, so in this particular scenario, Will, price was already ranging and had just gotten rejected off of key resistance. And so, like, if I were to speculate, they didn't want price to roll over lower coming into the new week. That's one, right? Because again, the dominoes effect start to falling, and you don't want lower lows. I think this is just before, like, this is just slightly after Bitcoin made the 76,600 low, and then we had a good pump up. I think this was like just pre-FOMC. And so, like, these guys, they wanted the market to pump. They probably had leverage positions, leveraged long positions that would have gotten liquidated themselves if price rolled over lower into the following week. And so you have incentive, right, from different whales who have, like, these guys, obviously, speculation here, they might have had leveraged long positions that might have gotten liquidated if price rolled over lower. And so they're like, yo, we got to get together and take this guy out, because he's adding on to the FUD. We got rejected at key resistance. He's 40x short, right? And This guy has a history of making good calls, and so people are watching his wallets closely, and then they might follow suit.
Oh.
Mm-hmm.
So it's kind of like a battle for the campfire story of like the price action.
Yes, correct.
Man. And they're causing price action by buying and selling. So so the guys who tried to liquidate the
Bear whale.
the short
Call him the
the
bear
short
whale.
bear
Yeah.
whale,
Yeah.
the guys who tried to liquidate him basically bought the top and then it went down anyways.
Yep. It didn't go down super harsh.
Okay.
It didn't go down super harsh, but they were not able to hit his strike price because he added the collateral.
Man.
Oh.
Interesting. I'm glad I don't understand leverage because it sounds kind of fun.
It is fun if you're careful. If you're not taking 50,
Yeah.
100, 200x leverage, you're like 2, 5x, 10x leverage, probably like on a balanced probabilities have a higher chance of getting filled. We have active day traders in our community all the time that are fairly successful because they're careful and they manage their risk. Their stop losses are like 1 to 2% below their entry when it comes to Bitcoin. And okay, you make a bad trade, you're out 1 to 2% of the trade plus fees, you live to fight another day. Some people, they take on leverage, they don't know what a fucking stop loss is. They're Caroline Ellison. That's why the advice of never play with leverage is good general advice, because most people don't know what the hell they are doing, man. They think, 200x position long, I make $1 million. They don't have a stop loss. So the bleeding never stops.
Yeah.
Risk management is the name of the game. If you don't understand it, don't play that game.
Yep.
That's a good that's a good transition over into the. Have you guys talked about PDI at all while I was while my internet had cut out? Did you cover that?
Nope.
No, sir.
Okay, dope. Well, would you guys like to cover? Did you promise to do TA on the Bitcoin Ethereum, Jay, or was there like a specific PDI technical analysis that we were meant to cover?
Brown just wanted me to go over the charts, and that's it.
Okie dokie, cool beans. Well, let's go ahead and talk about what's going on with PDI. As you guys may know, there's a token in the Richard Heart ecosystem. There's a forked copy of DAI that was made on Ethereum, which is ran by the MakerDAO protocol. So they all have the admin keys to that. There's a whole bunch of people with a whole bunch of tokens that can control the supply and the minting and yada 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 of this magical token over on both Ethereum and on Pulse Chain. So whoever owns these keys to this admin protocol can make things and make changes. And there's been a dude who allegedly has been borrowing and minting and recollateralizing and doing this process over and over again. And that's basically my understanding of the scenario. And so he's been more or less like putting in PDI, taking out a loan, getting Maker or getting some other token, and then which is then collateralized and then sold, and then all this stuff to make the PDI price go down or something, causes FUD, causes campfire stories. People lose their minds and stuff. I was actually just reading a Richard Hart tweet on it earlier where he's talking about like, be careful when other people have admin keys to a protocol that you're using. You know, like you should be careful trusting third counterparty risk and like not your keys, not your coins. Only engage in stuff that you know how it works and how it functions, and other people can't take your whole stash or anything. Do you guys have any thoughts on what's been going on with the PDI situation on Pulse Chain lately?
My personal opinion, I wouldn't touch it with a 100-foot pole. If you are going to take a shot at it, I think there is a time to take a very, very degenerate shot at it. But unless you can resolve the issue of players infinitely minting the asset, then I wouldn't touch it. Only until that risk is out of the way, I would be comfortable at taking a shot at it. Otherwise, why? You can track the guy on chain infinitely minting, taking the profits and bridging it out of Pulse Chain. Why would you buy in now when this player is still doing it, or multiple players still doing it? Why? Even if you're a filthy degenerate who doesn't care about taking these high risk plays, why? Doesn't make sense.
I will say, I've taken some gambles on PDI in the past, and they paid off well, and I exited. And I've also taken some gambles in PDI that did not end well, and I didn't exit at the right time. So like I have traded around in the PDI world and both lost and gained value. So like this was before any of this stuff ever started happening. So I'm looking at it through some skeptical goggles, much like what you're saying, Jay. Like I don't know if it can be minted into infinity. I think there is like it can be minted until it's equal to US to like the pulse chain copy of PUSDC or like until the maker token that gets minted is like of the same value or something. It's not quite infinite.
Okay.
It's not an infinite loop that can be dumped
fair.
forever.
That's fair, but the point
Is my understanding. I could be wrong.
It's still being minted continuously, and until that stops,
Yeah.
until that function is either terminated or that player is out of the game, and there's no more minting going on, the question is why? Why would you take a shot at it now when it's still happening? You're literally giving your money for them to take as exit liquidity, which they will then bridge out of Pulse Chain, which now affects the entire ecosystem because now that TVL is decreased. That money no longer remains in Pulse Chain. It doesn't make any sense. Until that player is gone, until that minting function has been terminated, there is no reason, my personal opinion, zero reason to take shots at this. Zero.
So I guess maybe take it one step back here. For the folks at home that don't know, PDI is a copy that was created when Pulse Chain was launched. It effectively is the Pulse Chain version of DAI. It is not DAI from Ethereum. That is something else entirely. This is something that was copied over from Ethereum, which means that unless it is supported like any other project on Pulse Chain, it is kind of just up in the air. And what Jay is talking about here is the fact that the ability to mint PDI was never turned off. So theoretically there is, or not theoretically, but actually there is somebody out there with administrative controls over this thing who can manipulate the supply in an instant and effectively just turn on the money printer for them and make as much as they want. This is the worst part of fiat currency cranked up to 1,000 because instead of actually having to use dollar bills and paper to make this kind of stuff, you literally just change ones and zeros on your computer and it can go up as much as you want. We've seen this kind of thing happen with some of the other P-stable copies in the past. I want to say PLUSD was another one that had this same issue where people found they had the admin controls and just made an absolute ton of it. And then because of that, you are diluting everyone else. You are making more of this thing that has some value. So what you're doing is just you're reducing the value per item effectively infinitely. This is a huge fundamental issue because it's one of the fundamentals of the tokens, which is that if the supply is not stable and controlled in a certain way, then it means that the supply can just go to infinity, but the actual value that is locked in that ecosystem stays the same. You're just dividing it by a different number, and now that number you're dividing it by has gone massively, it means the amount of value per item has dropped massively as well.
Yep.
Go ahead, Z.
I was going to say, this is a meme coin. I feel like anyone who's touched this or knows about it understands that concept, which is that the whole PDI to $1 thing is the meme. It is the narrative they're trying to push with it. At the same time, though, no, I don't think anyone is of the mind that this is a serious project with legitimate value. This is more of one of those intricacies that exists because Pulse Chain exists and the way that it was made. So there's things you can do, like hoping to try to, like, this is pure market. The price chart before all this stuff was pure market psychology, buying and selling purely, because there's no fundamentals, there's no use case. It's just people playing the game on a spreadsheet effectively.
It's a hope and a dream.
Exactly. So I know that it's in my opinion, it was one of the better ones that had a better narrative to push. But again, though, at the end of the day, it is a meme coin with a narrative. And unfortunately, now it's a meme coin with a narrative and very, very bad fundamentals.
And the founder himself, Richard Hart, of the entire ecosystem, has had to actually go out and name this thing, which he very, very rarely does. For Richard to come out and name something just to tell people you should probably stay away.
That's correct.
I do have
Richard
a bullish case for it. So once the conversation is over, I will do the quick and dirty chart for Brown, because there is a bullish case for this damn thing, believe it or not.
That's true. Yeah. So, Mrs. Producer, if you don't mind, I do have some screen shares real quick. Uh,
Well-
like Jay just mentioned, I think Will's also a fan of this idea, which is that if you don't like something, don't say its name. Richard Hart has publicly come out and started talking about it, which is it's enough of an issue in his mind to actually give some oxygen to for some sort of purpose. In this case, trying to scare people away from it effectively, or not scare people, but educate properly. We got from our friend Sami, Richard Hart just did 18 tweets in a row on PDI. He hasn't even done more than 4 tweets in a row for his own core coins up until this point. I've never actually seen him speak so much about one coin in a very long time. Can you remember what that coin was called? It was Hex. Matty Allen remembers that Richard Hart taught us something about the risk diode. That's the name of what I just described there. Where if you really think something is a scam, you stop talking about it so much. His nipples remain pegged, apparently. But yeah, there you go. That's from Richard Hart right there. And then someone who I know has been following this one and putting out some good information on it is KDP Crypto. She's saying, Justin, the OA has removed liquidity for PDI. The OA 100% does not support PDI and Pulse Chain. Stop giving scammers money. There you go. So liquidity is pulled. And then also from Katie, Richard has told everyone, those around PDI, all lie to you about everything. Pulse Chain will flourish again the moment the collective says no and stops allowing it to continue. From today, everyone needs to stop talking about it. If you talk about it, you give it life from now. So unfortunately, we are not helping that case as what's going on here. But the tweet from Richard, what's the difference between 1,000 tokens being worth nearly nothing and PDI being worth nearly nothing? Not much. The vast majority of P tokens aren't worth crap. The only difference was that the promoters of PDI did so much lying and gave out so much hopium that it actually on-ramped people. The problem is they didn't know the lies they were telling were actually promoting something that something was minting for free without having to buy it.
Mm-hmm.
No, it's the infinite minting thing.
Yep.
It doesn't cost you any, it doesn't take any ink or paper to make these things. It literally just takes changing the ones and zeros on a spreadsheet.
Okay, before we move on to the FOMC here, because we still have a lot of the FOMC meeting to cover, let me go over the chart for PDI real quick, because I do have a bullish scenario for PDI. So the reason why I am currently not touching it with a 100-foot pole is because of all the reasons that we mentioned, right? Unless that player is out, unless the minting function is stopped, then you're just asking to be exit liquidity. However, I was having this discussion with my team the other day, and I was like, look, somebody asked me, I think it was Dace, to do an analysis on PDI and PWBTC. And it was the first time I ever took a look at the chart. If you asked me, hey, Jay, can you take a look at this chart for me? And I didn't know for what asset, I didn't know in what community, and what L1, what the fundamentals, I knew nothing about it. All you gave me was the naked chart, and you asked me, hey, Jay, what's your initial impression? Bullish or bearish? Can you do an analysis? My first impressions of this chart was it is extremely bullish. Because right here, what you have is a textbook. When I mean textbook, it is a beautiful 5-wave impulse to the upside, leading, contracting, diagonal, follows every single one of the rules. It is a textbook chart, right? And so you got to give it that. And then if I didn't know anything about this project, I'm like, okay, yeah, you had a 5-wave impulse to the upside, and now you're getting a retracement, which you have your levels here, right? Your 382, it just hit, which is a rare, but nonetheless possible retracement for a wave 2, and but the thing is, you still have all of the fib levels to go, right? A common retracement to the 2 is between the 0.5 and 0.786 Fibonacci, which puts you at either 4 zeros or a 1836, or 5 zeros and an 8339. That's a very long ways to go to the freaking downside, right? Your invalidation still the same, 886 at 5 zeros and a 7289. If you hit that number, guess what, folks? On a balance of probabilities, you take out the slow and you're in price discovery to the downside. But again, this is if I knew nothing about this project, if I knew nothing about the shenanigans going on, this is, I would say, actually a beautiful chart. And this retracement is par for the course. Like all new assets do. They move parabolically to the upside, and then they get a massive wave 2 retracement to the downside. This is not rare for crypto. Most assets go through this. And guess what? If this narrative were somehow to shift bullish to the upside, well, guess what? You know where this wave 3 goes? Close enough to a freaking dollar. Because if you take the Fibonacci extension from the start to the end of 1,
Oh man.
Hold up. Let me do this correctly. Let me do this thing correctly. Let me remove the drawings. Let me remove all the drawings. Okay. Let's take a Fibonacci extension. Let's assume that this is 2. Right? That's the end of 2. From the start to the end of 1 to the end of 2. Let's toggle on our fibs. All right. Toggle on, okay, a minimum. All right. Let's toggle on all of our fibs. Okay. If this is a diagonal, okay, if this is a diagonal, your common extensions for a diagonal is anything below the 1-for-1 Fibonacci extension, right? Because your wave 1 has to be the largest in a diagonal. And so anything below that is certainly possible. And when you get up here to the 0.5 Fibonacci, that's 11 cents, pretty damn good. The 618 at 40 cents. And then in between the 0.786 and the 618 is your dollar targets. Now, if it gets bullish, do I think that you get up here to $2.30? I don't think so. Not in this bull market. Not unless this thing really catches a tailwind. But your dollar target sits right comfortably in between the 618 and the 786 Fibonacci. All right. And so could you get P-DIE to $1? Yeah, absolutely. However, until the conditions of the infinite minting function being terminated and those players leaving the game, is it possible for this thing to reverse trend? Yeah, absolutely. But at this current in time, with everything that we have just spoken about, no. Okay? Do not do it. That is a that's a personal opinion. That is a personal opinion, but I am not going to throw money at something that somebody can print into infinity for free.
I don't think it's exactly print into infinity for free. I think they can print it under X, Y, and Z condition or something like. And I don't know how. Again, I'm kind of just regurgitating things that I've heard from other people. But from my understanding, it's not an infinite print. It's like you can print up until this condition sort of thing. So it's like pseudo infinite printing. For all intents and purposes, the uninformed can treat it as infinite printing, and the well-informed can treat it as infinite printing. I just think that it's an important caveat to add. Like, and also, guys, none of this stuff that we're talking about is financial advice. Like this. This does sound like a really, really, really crazy protocol. And there was another tweet that Richard had made where he had tagged the P Maker DAO guys, and he said, "Hey guys, you have the opportunity to do probably one of the funniest things here in cryptocurrency." And I thought that was at the end of his like 18 or so tweet thread or something like that. I remember seeing that. I want to say it was earlier today, but I'm not entirely positive on that. But all that to say, like, this is a crazy protocol, and I think that Jay's analysis is probably the most logical. It does not sound like a smart thing to throw money into simply because Homeboy can make more of it using magical fairy blockchain pixies that I don't know or understand. So,
bro, these people are literally minting, taking the funds and bridging it out of Pulse Chain.
Yeah, it's like
come on, bro. Yeah. If you're all about Pulse Chain, these people are literally value extracting, taking that money and bridging out of your ecosystem. Why are you giving them money?
Yeah,
that's the bottom line. That's the hardest truth about it all.
That is the bottom line, bro.
It is a net drain. There's really no value add on this one right now.
Mm-hmm. I agree. And with that, let's move on to the FOMC. That's my smooth transition for you guys. You like that?
Yeah.
Will, can you run us through a quick round of chat shoutouts?
Oh, I could hold up the sun, but I'm currently doing 70 miles an hour right now.
That
There's
is
an exit
okay.
ahead. All right. I'm going to hold up the thing. And Zenith, why don't you go ahead and do some reading of these chat motherfucking shoutouts for me, if you please, good sir. If we have, uh-oh, did I lose people?
There we go. Oh, I think Mr. Producer is, there we go. She's going through it.
I literally cannot see the phone. My screen is in my face.
Oh, I got you. Okay, from Marcus
Thank you.
72. He says, "What's up, all? What is up with you, Mr. Senor Marcus 72? Good to see you." And then Doc, what's up, Doc? Your Health Unplugged, a very good friend of Will and the channel. Dr. Chen, what's up, DGen Legends? Missed you guys. Always good to see you, sir. Glad you could make it. And then Mr. Funkmaster Hex, ladies and the gentlemen, a very good evening. Very good evening to you, sir. Always good to see you as well on the chat. Always leaving us a comment for the algo. And then our good,
Holy shit.
our good brother and
Dude.
teammate, Mr. Dace. Yes, sir. What you got?
Sorry. No. Just there's a fucking Lambo stopped
Oh.
in the middle of the fucking interstate. Just like stopped. I thought I was going to get smoked by the semi behind me. Sorry. Keep going. Keep going.
Yeah. From our very good friend and team member, Mr. Dace Northal. That's a fib pull on a log chart. Just remember, friends, yes, the fib pull does have to be on a log chart because of the parabolic moves. Putting the fibs on log corrects for those kinds of moves. So we do have to put it on. We do have to put it on log. Otherwise, the math doesn't math. And I think that's it for chat shoutouts, unless we get anything else. That's
Thank you, Jay.
You're
Sounds
very
good.
welcome.
All right, let's get into what we meant to cover for the majority of the show.
Yes.
When me and Z start talking TA, bro, we just
It
keep
goes,
talking,
yeah.
man.
No, it's good. It's good learning stuff, and like I'm sure the folks at home appreciate it. So what do we got though on this? Oh, we've got a comment. I can't read that. What does it say?
The Lambo owner pulled over on the freeway to buy P-dye after Jay's chart analysis.
Yeah.
No, he's literally not pulled over. It's a 2-lane interstate. I'm in between Salt Lake City and Vegas right now, and it's just like they're just sitting in the left hand in the passing lane. So I don't know, like at the bottom of a hill, and I was trapped on both sides by semis right there. So it was like that was kind of sketchy, man. I did not know if I was gonna make it out of there.
If that guy
I
pulled
did
over
drive off road.
to buy PETA after the analysis, that's a good
Hey.
case study of someone who bought something and just heard one side of the equation and ignored all of the risk management on the other side.
Don't do that.
It might have been one of those newer Corvettes, but it was like it definitely looked like a Lamborghini. That's weird. I would not be driving my Lamborghini on the interstate if I were you guys. That's a bad place to put that thing. You want to go to the racetrack or some shit, or maybe like a mountain highway. Don't be chilling on the interstate with a bunch of other idiot drivers. Anyways, that was enough from me. Let's talk about the funk.
For sure. Alrighty, Jay, did you get a chance to listen to the press conference?
Yeah, we actually did a live stream during the day off, and we did a post FOMC meeting on the Telegram exclusive. It was a Telegram exclusive, so I mean, you guys are a bit late to the party, but if you don't want to be late to the party, scan the damn QR code, jump in the Telegram chat. We stream every single day, 7:45 a.m., and on occasions like that, we stream multiple times a day. So scan the damn QR code.
Get in there.
At 7:45 a.m. Mountain Standard Time, right?
Yes,
Arizona
sir.
time. Okay,
Yes, sir.
there you go. So you guys on the East Coast, you have some opportunity to go get your bagels and coffee. But let's talk about this thing.
True. All right, Jay. What was your overall sentiment? Like, what did you think the reporters were mostly asking about? Because I have my ideas.
So for the most part, a lot of the questions surrounded tariffs, right? Because, well, I'll leave it at that for now. Most of the questions around it surrounded tariffs and how that would affect both short-term, long-term expectations for both inflation and the labor market. Does that factor into the FOMC's analysis? We could get into the details if you would like to, if you do so desire. But that's it pretty much for the most part. I think that's where the most of the conversation actually circulated around.
I agree. A lot of the questions were tariff related and trying to talk about the Trump administration But in my mind, I actually think that they kind of missed an opportunity to talk about the more interesting stuff, which is the quantitative tightening, or rather the slowing down of quantitative tightening that Jerome Powell
went
mentioned
over
once or twice.
That went over their head completely.
I was like, what are you guys doing?
What the hell are you doing?
Like, he's told you this so many times. He's not going to comment on it. You asked like 7 questions on it. What do you?
Bro, you know how it is, man. These reporters, they're legacy media. What they want is they want the juice. They want the title of Trump versus Jerome Powell, and believe you me, they got some, because like the legacy media tends to do, they take things out of context. And I guarantee you, Donald Trump is not going to watch the FOMC. He's going to watch the headlines and say, "What? Jerome Powell said that tariffs are going to be inflationary." He did.
Yeah, that's
but taken out of context.
That's the WWE aspect of this one.
Man.
So overall, I got to say it was a decent press conference. It's not going to be the driest one ever, but at the same time, I think that some of the real nuggets of information were less touched on, but I tried to identify them where I could and pull them out. Overall, though, yep, tariffs, quantitative tightening, and then just a bunch of random, kind of just like the normal weird stuff that people talk about. Like there was one of them where a reporter was like, "Hey, on the press release you put out there, you remove the line about the balance of goals between full employment and price mandate." And he's like, "Yeah, that happens. Doesn't really mean a whole lot." Yeah. All right, so Mrs. Producer, if you don't mind, I do have the video pulled up. All right, gents, let me know if you cannot hear it, but I believe we are ready to go. Let's do it.
Colleagues and I remain squarely focused on achieving our dual mandate.
Sorry. Fun fact, 1.5 times speed is very doable. That's how I like to get through these things.
That's how I listen to Jerome.
Of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. Labor market conditions are solid, and inflation has moved closer to our 2% longer run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We also made the technical decision to slow the pace of decline in the size of our balance sheet. I'll have more to say about these decisions after briefly reviewing economic developments.
There you go. All right, TLDR. No rate change, but they are starting to play with their balance sheet, and they're actually starting to slow the amount of quantitative tightening that they've been doing. Yep. So we have quantitative easing and we have quantitative tightening. We've been in a long period now of quantitative tightening, and they're starting to reduce the technical quantitative tightening aspect when it comes to the assets on the balance sheet.
Yes.
So remember, they really only have 2 mechanisms that they can work with here. One is the interest rate. The other is the balance sheet. That's how they can affect the market by either putting money in or taking money out of it. So what we're starting to see is that they're reducing the tightening. We're not in full-on quantitative easing just yet, but the tightening is slowing down by half is what he gets to.
Economic activity continued to expand at a solid pace in the fourth quarter of last year, with GDP rising at 2.3%. Recent indications, however, point to a moderation in consumer spending following the rapid growth seen over the second half of 2024. Surveys of households and businesses point to heightened uncertainty about the economic outlook. It remains to be seen how these developments might affect future spending and investment. In our summary of economic projections, the median participant projects GDP to rise 1.7% this year, somewhat lower than projected in December, and to rise a bit below 2% over the next 2 years. In the labor market, conditions remain solid. Payroll job gains averaged 200,000 per month over the past 3 months. The unemployment rate at 4.1% remains low and is held in a narrow range for the past year. The jobs to workers gap has held steady for several months. Wages are growing faster than inflation and at a more sustainable pace than earlier in the pandemic recovery. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance.
All right, there you go. Unemployment continues to remain solid. And then as far as GDP goes, we had 2.3% over the quarter 4. So pretty much, what is that? October, November, December. And it seems that they've adjusted their projections a little bit towards the downside, which means that they're expecting slightly lower GDP growth over this year, but they do think it's going to get a little bit, it's closer to 2%, and if not slightly above 2% out once we get into 2026 and 2027.
Yep.
So overall, though, Jay, what do you think? Changes?
So a few things. The labor market data that they spoke about. So the labor market, he always says not a worry about causing. It's not a worry for inflationary pressures. So that's good. Labor market data seem to be pretty stable, especially even the prior readings that we got over the last few months. Labor market has been particularly stable, so it's not a really big worry there. I know they projected 4.4 unemployment heading into 2026, I believe, which is still well within reasonable bounds. So the unemployment stuff and the labor market stuff, not really interesting. The more interesting part is, like he mentioned in the beginning, right? Slowing down the rate of the balance sheet runoff, right? And so instead, that basically means instead of them so they allow their securities to mature, like the treasury securities or the mortgage-backed securities. They allow those things to mature. They don't take the money and reinvest it back in, which would pump up the money supply, right? There's your QE, right? Instead, what they're doing is they're allowing those things to mature. They're not reinvesting it back into the money supply, and so that's good because that means they're slowing down the rate of tightening, right? It's not beginning QE, it's not stopping QT, it's slowing down QT. I know you've seen a lot on crypto Twitter. Oh, April, here comes April, big bullish pump in the market, QE starting. Right? I see this thrown around crypto Twitter all over the place. I'm like, he just said they were slowing it down. He didn't mention that they were stopping. He didn't say they were starting QE. In fact, they don't even say when they're going to start the rate cuts again. All the projections that we get on there in the market are by people like the CME. The Fed never say when the next cut is going to happen. They give you projections, right? We think a total of 50 points this year and another 50 points probably next year, but they don't tell you when. They don't tell you how much during what meeting. They only tell you the only thing that we got here is that we're going to slow the runoff, and that's it by around 50%, I think, or close to it. That's all we got.
As far as the rate cuts for 2025, we did get a question and a clarification on that. We'll hit that clip a little bit later. But right now, I do want to get into our first question, which does talk about the reducing QT. So here we go.
Politico. I wanted to ask, first of all, if you could clarify, you were talking about how tariffs were a good part of the uptick in the inflation forecast, and I was just wondering what that specifically refers to. Is that the tariffs that have already been put in place? Is that anticipating some of the tariffs that might be coming on April 2nd? And then also, if you wouldn't mind, talking a little more about the balance sheet decision and what drove that. Did that have anything to do with expectations of how the debt ceiling, raising the debt ceiling, might affect the reserve supply?
Yeah, so in the SEP, you'll see that there's not further progress on core inflation this year. We're kind of flatlining, going sideways. We don't ask people to write down how much of this is from tariffs and how much of it is not, but some of it is from tariffs. We know that tariffs are coming in. We know that they're probably already, all forecasters have tariff inflation affecting core PCE inflation, core CPI inflation this year, without exception. I'm not aware of an exception. So it's in there. I can't tell you how much of that it is. In terms of the balance sheet, so yeah, I think, I guess the way I'd say it is, it was the flows in and out of the TGA that got us thinking about it. But as we thought about it, we really came to the view that this was a good time to make the move that we made. And broadly committee that came around to the view that we would do the same thing we'd already done, which is I guess in June, was it June, whenever it was, we lowered the pace of QT, and we're just going to do that again. We're going to cut it roughly in half. And the sense of that is, if you're cutting the pace of QT roughly in half, then the runway is probably doubled. Okay, so it's gonna be slower for longer, and people really like that. People thought that's a good idea. You know, it's like a plane. You can think of it like a plane coming in for a landing. As we get closer, and we by the way, we still think that reserves are abundant, although you begin to see some of the things we look at begin to react a little bit, but we still think that they're abundant. And of course, now the TGA is emptying out, so reserves are higher now, so you can't really see the underlying signal. So we came around to the view, and it had a lot of appeal, and so we did it. It has no implications at all for monetary policy. It has no implications at all for the ultimate size of the balance sheet. It isn't sending a signal in any hidden way that you can try to tease out. It's just not there. We're basically, it's very consistent with our plans and our practices that we've published and that we've followed since we began this, what is a very successful, rundown of the balance sheet. Again, the second time that we've slowed the pace, and we've said that we would stop when we were somewhat above the level we judge as ample. And clearly we're not at that level yet, but we're going to be approaching it more slowly. It's a common sense kind of a thing, and it had pretty broad appeal, I will say.
There you go. Reducing quantitative tightening by half pretty much. And this is the second time they've done it.
Yeah, they did it in 2024. I love how he said the slower for longer. So now we have higher for longer, and we have slower for longer, bro. I guarantee you, he said, Jerome Powell's like, well, yeah, everybody really liked that. I guarantee you, man, JP, slower for longer and higher for longer, does like the risk assets don't like those two statements. I guarantee you that much.
Yeah. So what we're seeing here is just continuation of the trend it's not a completely different direction. It's just less of what they've previously been doing. So it's not a reversal. It's not a change. It's more the same. And like you said, slower for longer. So that's what we can expect. I will say this is pretty classic Jerome Powell in my mind, which is that it's consistent. It's maintaining everything that they've been talking about previously. So it's just a continuation of what's already been going on. And this is how they're making the shift on this one. Didn't change interest rates. Didn't get any new data to suggest that they have to alter their stance drastically or anything. But this is more of them just carrying out their internal strategy that we've been seeing pretty much since 2024.
Yep. Precisely. Nothing, absolutely nothing has changed. The only thing that was factored into the equation is the stuff about tariffs. But we'll talk about that once we go over some of the clips that you have, Z.
For sure. Alrighty, I do want to talk about the unemployment and employment in general. So 113.35.
So with near 4% unemployment rate, that should be low enough to bring people in from the sidelines in terms of hiring. But we're seeing the hiring rates have been stuck at 2023, 2024 levels. So what's going on there?
Yeah, so that's a feature that has been for some time a feature of this labor market. You have pretty high participation accounting for aging. You've got wages that are consistent with 2% inflation, assuming that we're going to keep getting, relatively high productivity. We've got unemployment, pretty close to its natural level. But the hiring rate is quite low, but so is the layoff rate. So you look at initial claims or layoffs, so you're not seeing people losing their jobs, but you're seeing that people who don't have a job having to wait longer and longer. And the question is, which way does that break? If we were to see a meaningful increase in layoffs, then that would probably translate fairly quickly into unemployment, because people are, it's not a big hiring market. We've been watching that, and it's just not in the data. It hasn't happened. What we've had is a low firing, low hiring situation, and it seems to be in balance now for the last 6, 7, 8 months. That's where we are. There's healthy levels of job creation too. So overall, it's a labor market that's in balance, and we watch it very carefully.
So then, have we seen the new administration's policies in the economic numbers yet? And when do you anticipate that happening?
In labor or in other?
In labor and inflation, just across the economy, have we started to see the new policies take effect in the numbers?
Only in a kind of an early way. I mean, it's only been a few months, right? For example, the layoffs that are happening here are, they're certainly meaningful to the people involved, and they may be meaningful to a particular neighborhood or region or area, but at the national level, they're not significant yet. But we don't know. We don't know how far that will go. We'll find out much more. I mentioned that you saw we've had two very strong goods inflation readings in the last 2 months, which is very unexpected. I think hard to trace it to specific tariffs, but it must have something to do with, it's either noise and it'll come back, and that's very possible too. But if it is persistent, then it must be to do with people buying ahead of tariffs or raising prices ahead of tariffs and things like that. Those kinds of things happen, and they're very, very hard to capture because so much of it is indirect. A great example is their washing machines were tariffed in the last round of tariffs, and prices went up. But prices also went up on dryers, which were not tariffed. So the manufacturers just they just kind of followed the crowd and raised it. So things happen very indirectly, and so there'll be a lot of work done in coming months to try to trace all that through. But ultimately, though, it's too soon to be seeing significant effects in economic data.
There you go. Already two things there. First one was talk. We'll cover the second one there real quick. Economic data. It's slow. We all knew this. No one is surprised, but it's a good reminder, which is that, yeah, the Trump administration has been in office for about 2 months and 2 days now, I believe. So all the data we're getting is we've effectively had 1 full month of data because remember, the data is effectively for the previous month. So as Jerome said there, 1 or 2 indications. That could be noise. It could be the start of a larger trend. But until you get confirmation on the other side of that, you just don't know.
Yep. Yeah, so like it's not like it's a bad question. I just don't like the question for the fact that, dude, how long have you been doing this job? You should know that economic data is slow. So for you to ask him, how do you think the policies of the administration are affecting inflation? I'm like, bro, this is your job. The economic data comes in slowly. You have effectively 1 or 2 months worth of data coming in from the current administration, and then how can you even parse out how much the tariffs have affected that data? And the answer is you can't. He mentioned earlier in the stream also that to be able to parse out tariffs from inflation from tariffs and inflation not from tariffs is a very difficult thing to do. Like, it's very difficult to parse out that data. Further, remember that the incoming administration's effect on the economy in general is not just coming from the tariffs. He mentioned it. They're potentially coming from tariffs. They're coming from fiscal policy. They're coming from immigration policy. And they're also going to come from regulation. Like, how can you possibly ask this man to be able to parse out all of those different variables in a country that's like 350 million people? And yes, I want the answer a month after we actually get data from the current administration, right? It's not a stupid question, but it's just like, you should know better than to ask that question, bro.
Yeah, that's a pretty fair read on that one, actually. I do want to get to the first half of the question, though, which is talking about unemployment. So what Jerome was saying there is that right now we're not seeing a lot of layoffs, but at the same time, we're also not seeing a lot of hiring. So that's what's causing the number to stay relatively stable, because those factors are in balance right now. If either one of those factors moves in a direction, that is going to be the indicator that moves the unemployment rate. And I know that's a very obvious statement saying, oh yeah, if one thing changes, the overall number is going to change. Yeah, but they happen in different directions. So hiring is still slow. This is absolutely a continuation of what we saw through pretty much 2023, 2024, which is that the job market got super, super hot in 2021, 2022, as a result of a lot of the changes in the economy from going to a largely remote-based work style. And we've seen that drop out in 2023 and 2024. So people are no longer getting hired for remote jobs. People are trying to get back to in-person jobs, or the businesses are trying to kind of cram that down on everybody. And it's a continuation of what we've seen, which is that the job creation has largely been stagnated. And until we start getting a trend in either direction, we're not going to see that number change. So we're looking for an outside stimulus that's going to affect this. It could be economic downturn, possibly. It could be more GDP growth. And it actually, ironically, could be the effect of tariffs coming into the future, which is that if there is more money to be made inside the United States as a result of the tariffs, because they are protectionary to a degree, that means that could be one of the things that boosts hiring, because people are starting to increase manufacturing, starting to increase all their logistics, starting to increase all the surrounding positions for a business. It's talking about like administrators, managers, even HR, as much as I hate HR.
Supply chain stuff, right? Yeah.
Exactly. Yeah. So that one actually dovetails into another question that we got. 135.20.
Hi, Chair Powell. Neil Irwin with Axios. Treasury Secretary Bessent has observed that a large share of job growth over the last couple of years has been in what he calls government or government-adjacent sectors, healthcare, education. Do you agree that there's some weakness in underlying private job growth? And do you see the composition of job growth as something that has policy implications?
So that has been the case. We talked about that over the course of the last year. There were some good number of months and times when a lot of the job creation was concentrated in, educational institutions, healthcare, state governments, things like that. There were also times when private sector job growth has been moving in a healthy range. I mean, they're all jobs, but and remember, we're at very low unemployment for quite a time now. So I think it's a good labor market, but it's something that we monitor carefully. From our standpoint, employment is employment. But the elected government is entitled to have, we don't have policies that address different kinds of employment, but the elected government has a different role, and they can have those.
There you go. All right. So one of the things we're talking about for a lot of the press conferences in 2024, specifically the jobs data that we got, was that the government was making up a lot of the job creation that was going on for that. This is the one question where the new administration actually is going to have an outsized impact in this, which is that the Trump administration is largely, especially through DOGE, is trying to reduce the government workforce because it sees it as largely bloated. So what that means is that we can anticipate that we're going to see less jobs created in the government, which means that this is going to be one of those things that could affect the numbers or the two halves of the equation that we talked about previously, which is that if there's less jobs coming out, then it means that the unemployment can start to rise. And this is one of the things that could actually start to factor into that.
Mm-hmm. Yeah. But overall, on the employment numbers, it really, like I mentioned earlier, those things seem to be the most stable. Unlike with GDP, that was downward, they downwards revised their targets for this year and their targets for next year, and then like core PCE was upwards revised, right? To 2.8 for this year. The labor market stuff was really the most. It was I think it's the one bright spot out of the entire meeting in terms of okay, are we going to be concerned overly about the labor market? From the data that he's presenting and from what he's saying, it doesn't seem like the labor market is not a super big concern for them in general at this moment. But then he also addressed if it moves too far above or too far below our median expectations, that's when we can take the quick action. But otherwise, those expectations are, like he said, they're well anchored.
Yeah, for sure. More to come is the answer on this one. But what we're seeing is that we've approached this steady state of having relatively stable unemployment, but we're starting to see moves that are going to actually start affecting these things. And that's really what I'm going to be looking for in the near future.
Yeah. Yep. I mean, certainly, like you said, right, if there's an influx of, if there's a necessity for more labor in the areas where manufacturing might increase, because now you're encouraging more American-made products, more American-made goods and services, then yeah, could you have a hiring spree in those sectors? Absolutely. And they will be different from the hiring spree that happened in those sectors, for example, that we had during the pandemic, which, I mean, he mentioned stuff like healthcare, right? And hospitality. Well, those things very obviously went up because there was a big necessity for them during that period of time. So can it be different this time? And we see a different influx of labor, of hiring in a different sector? Yeah, absolutely.
Definitely. All right. Do want to shift a little bit over to tariffs because we have a new round of them coming up on April 2nd. I just want to get my data straight real quick.
Mm-hmm. Yeah, the tariff stuff was the juicy stuff, and then the inflation is transitory. That's what people really hooked on. Inflation is transitory, which is gave people whiplash. Again, taken out of context, and the tariff stuff. Oh my god, man! They want him and Donald Trump to have a WWE match.
Alrighty, so April 2nd, what we're going to be getting is we're getting reciprocal tariffs. What this means is that any country out there that pretty much has tariffs on the United States goods, we're putting a reciprocal tariff on them. So largely, we're looking at a 25% tariff going into automotive, and the big one is actually European, because there is a proposed 200% tariff on alcoholic beverages, including wines and spirits. So as much as everyone loves their... What's up?
Did you see the drama that was behind that though? That's you're skipping over the fun part, man. I mean, I don't want to bury the lead or anything, but there was some fun stuff that went into that.
Which part will it?
So the long and the short of it is that Trump was like, all right, we're going to put a 25% tariff on steel, and then the European Union, some lady, I can't remember what her name is, like Ursula von Zilla something. She was like, oh well, if they're putting this tariff on steel, well, we're going to put a tariff equal to that on like whiskeys and stuff. And then Trump was like, okay, well, we're putting an even bigger tariff on on all the champagne and all the wines that come from the European Union put a tariff on whiskey. And then Trump's like, okay, well, we're going to tax the wine and the champagne that is imported from France and like all that other. So it's just this constant back and forth of tariffs games. And it's so funny. Like watching the
tariff games,
the polite wars, or whatever you want to call them.
This is the effectuation of soft power between nation states, and the United States still remains the world power at this point. Granted, there are other people that are trying to challenge it, like the BRICS nations and whatnot, and the EU to a certain extent. But this is what we're seeing when people are talking about the trade war. This is what's going on with that. And largely, this is what is leading to the uncertainty in the markets, and what is caused pretty much since January. I think it's the Dow Jones is down like 10% or something. That's what we're seeing, which is this is uncertainty in the market, which is why businesses are reacting the way that they are. But yeah, Will, you're entirely correct, which is that it's moves and counter moves in the chess game, which is that one thing is proposed, and then your opponent's not just going to sit there and take it and just do nothing. They're going to start making moves of their own as well. So also understand, this didn't just start with the Trump administration. The stage has been set for a long, long time leading up to this point. This is just the new inflection point, or a new decision point, where they're actually starting to make moves on it, and we're starting to see those actually play out as opposed to just being talked about.
Yeah, because you know why? The commander-in-chief is actually about taking action and not just talking about it.
Yep.
Shocker.
Yeah.
I mean, I do find it refreshing that people are actually making moves as opposed to just kind of bemoaning everything going on in the world. But yeah, like you said, we're starting to see action being taken, and that's why we're seeing action in the markets, and we're seeing action with all the positions that different countries are taking. Yep. Something I mentioned on the show previously is that what appears to be happening with the tariffs, or at least the tariffs in the past, is that they're used as bargaining or negotiating tactics to get other people to do things that they want. The question right now is, are these just being imposed because Trump believes that tariffs are fundamentally a good thing, or are they being imposed to try to get other people to make moves that the Trump administration wants to see happen? So when we saw stuff like, was it Venezuela or Colombia, where they refused to take the illegal immigrants back, and then Trump was like, all right, fine, we'll just start tariffing you, and then every week you pretty much just don't take these guys back, those tariffs are going to keep going up. And then, well, shoot, immediately that afternoon they said, oh wow, we're happy to assist you with this. And I think it was Colombia. Yeah. So go for it, Will.
I was just going to say, there's also like the U.S. is shipping people over to the forever prisons in El Salvador, but that's a totally different subject.
Yeah, for sure. That's a big one coming up. That's more of the my specialty, which talking about how these are going to actually go down between the circuit level courts and the Supreme Court and the administration, and what level circuit courts have a power to effectuate a sanction or temporary restraining order on the federal government. That is a big constitutional question that I hope to have answered. And I talked to Nuclear Herbs about that one a lot. And we're both looking forward to seeing some of that stuff come down and actually get a ruling on it. But as far as the tariff stuff goes, I think that I hope that these are chess moves that are being made to support a larger purpose, as opposed to just create a new economic kind of playing field, so to speak, if that makes sense.
It does. I think they're both, Z. I think that in the depths of his heart, I think Trump is actually believing that they're good overall for the American people and the country. And then he's also going to use them as a bargaining chip. So I think I think he's using both for sure.
Definitely. Everyone knows that a lot of what we have shifted to in the last like 50 years is outsourcing the industrial base, putting it in other nations. Primarily China is one of them. And China is going to be one of the big ones that this tariff is going to affect because, like Will mentioned, this is steel and aluminum tariffs on China. So what we see as a result of this is going to be interesting. China is economically and politically, ideologically, an adversary of the United States, and that's why I think these are being imposed there. As far as the EU stuff, I think that's more of just Trump trying to rebalance some of the import exports of the world going on, because he's talked largely about how Canada has been a major benefactor of the United States at effectively no cost. Mm-hmm. And when it comes to the EU, I think he also has a largely similar view on it, especially if you look at the UN and stuff like that, which is that they've been trying to get them to bump up their defense spending to 2% of GDP for each nation. And they've been reluctant to do it. This could be one of the ways to help pressure that and ratchet that up in that regard. So that's what I'm seeing on the European front. As far as the Chinese front, I think it's largely just trying to actually make moves against our enemies. We're not in a hot war with them or anything, but the fact that we have outsourced our industrial base to China largely over the last 30, 40 years, it's something that, especially if you're looking at the national defense mindset of it, it is very important to not rely on someone who is actively fighting your efforts on the world stage, to rely on them for critical infrastructure and for critical support for things like your wartime efforts.
Yep. Which is a pretty reasonable take.
Yep.
For sure. It's a lot. It's definitely not a boring time in the world right now. I'll say that much, especially if you're a Politico, which I kind of am a little bit, although I try to be more of a crypto bro. But yeah, we keep getting dragged into that more and more, which is why I'm going to keep focusing on it when it comes up.
I mean, they're pretty intertwined, though. You know, like there's
certainly are.
They really
like
are.
The politics is the deciding factor of how power gets distributed in the world, and cryptocurrency is just one of like the four pillars of like sovereignty and power and stuff. You've got, you know, your freedom of movement, your wheels, your wings, your whatever you want to call it, your ability to travel around places. You've got your ability to conduct violence or defend yourself or whatever. You've got your ability to spend money, and you've got your ability to talk about things, you know, and politics plays a very heavy part in those four little realms, and determines like, hey, can you cross this border? Is there a checkpoint? Are you allowed to drive? Do you have a little license? Like, hey, can you talk on Twitter? Is your freedom of speech being impeded or whatever, you know? Like, there's a whole lot of cross pollination between the two. So I think we're gonna probably see if my ability to predict the future is as shitty as I believe it is, I think that we'll be seeing a lot of political people talk about cryptocurrency and a lot of cryptocurrency people talking about politics. Like, there's a huge crossover there. A lot of the crypto bros are already in the political scene as libertarians or anarchists or whatever you want to call it. But like, I'm positive that you're in the right place, Zenith.
Much appreciated. One of the reasons why I spend so much time like streaming with you guys and trying to talk about this stuff is that I think cryptocurrency has opened up a new avenue to either fixing the money supply, providing an alternative, or actively combating some of the existing problems. I think that is a massive thing. That is a new road that has not previously existed, which is why I'm willing to spend so much time trying to figure this out, because I think it could be one of those things that really kind of shakes up the balance of power on the world stage. So like, governments are no longer they're still able to print fiat currency into oblivion effectively. But what this does is provides an avenue, like you said, with that freedom of movement, not just for yourself, but for your money especially. Yep. It's like the classic Michael Saylor line of like, try carrying a gold bar across an international boundary, or try carrying more than $10,000 in cash across the boundary. Good luck with that. Let us know what happens, if you can still let us know while you're in jail or getting investigated for this sort of thing. Yep. So yeah, cryptocurrency it's a very powerful front for the existing world stage, and I think whoever figures out how to leverage it and adopt it the best way possible is going to come out on top, whether it's individuals or it's a nation state. For more on that kind of line of thinking, I highly recommend you check out the book The Sovereign Individual. That's the one that really talks about this thing, which is that as we move more into the future, individuals are going to have the ability to rival nation states. And cryptocurrency is going to be one of those things that allows you to do it. Because if you no longer have to rely on using a money that is from a specific government, you're no longer bound by all the effects that has. So sovereignty and jurisdiction are going to be less and less important in the digital space into the future. Obviously, you as an individual are still the wet robot, as some people are fond of saying. So you still got to operate yourself inside of a jurisdiction somewhere. But as far as your online footprint, that's going to be the thing that allows you a lot of freedom coming into the future.
Now, speaking of Michael Saylor, remember not too long ago, he said that the first country to print money and buy Bitcoin will win. Uncle CZ just a few days ago was like, yeah, man, I agree. Countries are going to print fiat in order to buy Bitcoin, and whoever does it is going to win.
It's like we were talking about with the PDI stuff previously, or some of the leverage positions, which is that as individual retail investors, if you're operating in that giant pool, the ocean of money, if you will, you have very small impacts. But like we said there, if you can get to that size where you're able to affect those markets, those are going to be the real players in this space. And like you're talking about in Michael Saylor and CZ, yeah, the governments that are able to affect, it's going to kind of be a race to the bottom, which is that the first person to print their money into oblivion to buy up as much Bitcoin as possible, they're going to have the greatest effect. And then whoever does it next, they're going to start to see diminishing returns because it's going to cause a lot of havoc. And there's only so much Bitcoin that will ever exist in the world. And once it's locked up, baby.
Or another take, and this is the take that Uncle Kim likes to do. They could just steal your crypto and then convert it into Bitcoin like the Lazarus Group did a few weeks ago. They took all that. They took all of that Ethereum from Bybit and they tornado cashed it into Bitcoin. I don't know if they use tornado cash, but they turned it into Bitcoin.
The reports that I was seeing is that a lot of it did go through. I want to say like 60 to 70% of it went through tornado cash.
Yeah. Okay. I know. So okay, they did. I know they used tornado cash a little bit, and then Thorchain I think was the other one that they used a lot of.
Can we touch real quick on the subject of tornado cash? Can we mention, like, I think it's appropriate to mention that got removed from what was it, the international sanctions list?
Yeah.
OFAC, yeah.
Mm-hmm.
Yes, sir, Mrs. Producer, if you don't mind. Coming to you from CoinDesk, we have U.S. government removes tornado cash sanctions. It was previously sanctioned multiple times over allegations of helping the Lazarus Group, aka the North Korean hacker group. This is how they use a mixer to obfuscate stolen funds and reallocate it for their new purposes. So it previously was OFAC is the government organization that does the control of effectively antagonistic or nefarious monetary uses internationally. Tornado Cash was previously on that sanction list, making it so that if you touch it, you're pretty much going to be listed as a bad actor. We had the ruling, I believe it was from the Fifth Circuit Court in Texas, which was saying that because it can't be classified as property by the definitions of the existing legislation, it means that you can't actually restrict it because no one controls it, because it is a finished project. The administrative controls they're removed. So because of that, it's no longer property. So yeah, seeing this come off the government sanction list is a big win for Tornado Cash, and it's a pretty good win for privacy when it comes to operating on the blockchain, which is that if you have the ability to operate privately and maintain, or at least keep some of those cards close to your chest in a world where when you're on blockchain, it's available for everyone. Those are going to be the things that allow you to make real moves. To give you the allegory to real life, it's kind of like, imagine trying to run a business where everything you do is publicly available. All of your inside information, what you pay yourself, what you pay your staff, how you, your internal processes even. Like if you have some sort of proprietary information, it's no longer proprietary because everyone can see it. It's that kind of stuff. Having that shield of obfuscation is important for business and free commerce. So I think this is a step in the correct direction. I am not naive enough to believe that they're not going to try something else with Tornado Cash and other privacy-like projects on blockchain. But until we see those moves actually be made, we can only anticipate and kind of speculate about what they're going to be.
Yep. But hey, man, good news for privacy, right? W privacy, W for common sense regulation. Hopefully this has positive effects on Roman Storm and Alexei as well. Roman, I think, is still set to go trial. I don't know how this will affect that particular incident, but hopefully it's positive. So yeah, W on that if that were to happen, because like we mentioned when this whole thing first started, you should probably not judge a software by how a small number of bad people use it, and you should probably not judge the creators of said software by how other people decide to use that software, because that is a very foolish thing to do.
It's like imagine OPEC finds out about the US dollar and how much that's used for crime everywhere. It's like, oh man, I guess we got to ban all the dollar users.
They can. The companies that had the most fines, guess what? JP Morgan, Wells Fargo, Bank of America, they have been fined the heaviest because of either they're not following said regulation, they broke some rule, criminals using the US dollar, et cetera, et cetera. So, I mean, they know. They just like to pick and choose the winners and losers.
Yeah. Which, like, I'm glad that this ruling came out, and there is a difference between a ruling and then an effective like difference that it makes in the world. You know, it's like we can call things legal and illegal all we want. It's like, what are the laws that are enforced? What are the things that actually happen? Like, what are the changes that are going to be made? Is there going to be some other like little thing that pops up now that people are going to actively choose to, like, let's say, you know, you use like let's say one of us uses Tornado Cash, right? And then we go and try and take that money and bridge it over onto Coinbase. Well, now OFAC no longer says it's a crime thing, but let's just say Coinbase is no longer like, you know what, I'm not touching those fucking dollary dues or those Ethereums or whatever the hell, right? Like there's the government is it's one layer in a many tiered problem sort of world that we live in. So it's like we'll celebrate this victory and there's plenty more fights to go. But like we'll take our wins as we get them.
I think if that were to happen, I think it would be a lot better than if they kept it on a sanction list, right? Because Coinbase is
sure,
like, or not. Well, Coinbase has gone public, but like private entities can make their own rules, right? And so if like
absolutely,
right. Like for example, like let's say Strike, like Jack Mahler's company. He said, look, if you use Tornado Cash, we're not going to accept your business. Well, he's a private company, so I think that's fair. Let private entities do and make rules like they're entitled to do that, as opposed to just throwing a blanket rule says this is on our sanctions list. If you use it, you're a criminal. Like,
you're right, Jay, and I agree with you. So let me change my analogy to something other than Coinbase and just insert whatever, you know, whatever governing agency or something like that rather than a private business. So you're absolutely right. It is important that that businesses be able to be given sovereignty to make their own rules and things. But I don't want to get too far down into the if thens and get lost in the forest for the trees or anything. Because we could do this all day. Z, do you have any thoughts on Tornado Cash? And then if there's nothing else that we want to cover tonight, then I'll go ahead and do another final round of chat shoutouts and we'll move to close.
Yeah, as far as the ongoing cases for the Tornado Cash founders, they're being tried in courts outside of the United States. So things inside of the United States can theoretically help their arguments, but it's not going to have actually any direct effect with regards to the rulings over there because they're facing
Roman too. Z.
I
thought Roman was here.
I thought they were in Dutch prison or something.
Alexei was already imprisoned. I know Roman is still ongoing.
Roman Storm, one of the co-founders of Tornado Cash, faces a criminal trial this July over his alleged role developing smart contracts and protocols. Another developer was charged but has not been arrested. After the Fifth Circuit's November ruling, Storm's lawyer filed a motion requesting the court reconsider its earlier decision to deny the dismissal of charges against him. This motion was smacked down in February, with Judge Catherine Polk Faya of the Southern District of New York arguing that whether or not Tornado Cash itself was subject to sanctions, quote, does not affect the sanctions defendant allegedly conspired to violate, end quote.
Wait, what?
If it's Judge Faya, she has a pretty good head on her shoulders. She's the one that presided over the Coinbase thing, I believe. So, I mean, maybe this will reflect positively on how she views that case. Oh, you have to be determined, though. You said July, Z?
July, I believe, yeah.
Okay.
So, someone correct me if I'm wrong, but my understanding is that they're not facing American charges. But if they are, and I'm wrong, then this would actually have a larger effect than I previously stated.
Okay, I gotcha.
Okay.
That's all I got on that one, though. Will.
Okay. Anything else we wanted to cover for closing out for the night?
Not especially. Just as a quick side note, there was a crypto summit that happened on Friday. We are still waiting to see the effect of it. As it stands right now, not much has come out. President Trump did give a small address to it. We had a 3-minute video queued up, but I think we are running out of time here.
It was a nothing burger basically.
Yeah.
It's TLDR. It was a whole lot of we're gonna make crypto great in America and congratulations to me and yada yada yada. That was what that was.
Fair enough.
Oh, fun. All righty, excellent. Well, Mrs. Producer, if you're here, it's time for some motherfucking chat shoutouts. I think we have some chat shoutouts to get through. I don't know. Do we do Funk Master Hex earlier? I remember seeing him somewheres, and I don't remember ever mentioning him. But if not,
we did during our second round. We did, yeah.
Okay, sweet. I can't tell if there's any chat shoutouts. I don't see
We do have a good final chat from Jay, our good buddy, Mrs. Producer.
Okay.
I'm pulling that one up. He says the TLDR for this episode. Down 2 more. TLDR: avoid tariffs. Drink American beer and vodka.
All right, that's easy enough. I like it. Ladies and gentlemen, you heard it here first from Farmer Jay, the man himself living under a bridge over in that part of the country that he's at. Drink American beer. And Hexkin Lost in Asia has joined us. Thanks again for the show, DGens. Ninja watching the Dodger game. Excellent. Oh, and also Dodgers. Oh, Dodgers. Okay, excellent.
Isn't Otani?
Dodge those Dodgers.
I think Otani's in the I think Otani's in.
I think that's
the
right.
Dodgers. Yeah.
He could be
the Golden Boy, Mr. Shohei.
Go
Everyone's
sports ball
favorite
teams.
DGen. The man loves betting.
Oh,
Unfortunately,
he's a
can't just bet on
gambler.
himself. Oh yeah, for sure.
Ah.
Notorious.
Ooh, okay, excellent. Oh, and speaking of gambling, here's to moon-pilled rational optics to your child. Your bags are going to pump, good sir. So, I remember seeing that somewhere as I was scrolling through absentmindedly. So, with that, ladies and gentlemen, thank you for joining us for this evening. Zenith, Jay, where can the folks find you, and what have you got going on in the near future?
Ladies and gentlemen, you can find me over on Twitter, now known as X, and Instagram at ZenithDI. That's where I post a lot of the stuff going on, try to keep track of everything on the social medias, and shout out all the people that we love when we see them stream. I know Mr. Angry Twinkie and RH Max did an excellent stream recently talking about AI and how to actually use those tools to leverage and do things that would formerly have taken you months that you can do in a matter of minutes. Outside of that, I think I'm actually planning on joining RH Max on Tuesday at noon 2 p.m. Eastern time for what he's calling a mega stream. So I'm very excited to see what he has planned over there. But other than that, that is what I got going on. Jay, what about you, good sir?
Let's see. As far as what's going on, we got a stream tomorrow on Walk the Block, 8 p.m. Eastern time, 5 p.m. for me here over at the Mountain Time in Arizona. So, and before that, you're probably going to catch me 7:45 a.m. on the Telegram. So like the damn video. Comment, subscribe, scan the QR code, jump in the Telegram chat if you want to catch those not really emergency streams. They're market open streams, 7:45 a.m. MST. Got a whole bunch of guys and gals that join in every single morning to contribute to the discussion. So you are certainly welcome to join us if you are so inclined and up in the middle of the morning like we are. Aside from that, thank you guys as always. Whether you're here live with us or if you're going to catch us on the replay, we know that time is your most valuable asset. So we do appreciate that you spend some of that time here with us at the DGen Roundtable. We always appreciate it. And until next time, Will, take us out.
Alrighty, ladies and gentlemen, like Agent Jay just said, you guys can find us in the Telegram. For those of you that are watching or are listening on Replay Gang and don't have access to this QR code, just listening, go up to your URL in whatever web browser you're using and type in t.me/DRT join now, and that will bring you over into our DGen Roundtable Telegram. Again, t.me/DRT join now. For those of you guys who don't know any of my socials or where you can find me, all of my stuff can be found at will.pls.fyi. You can find all of my socials there on my Facebook, Instagram, Twitter, Telegram. You can find these designs for these bad idea t-shirts and go buy them over there if you want. They're not mine. The other company gets them. But but yeah, that's what's going on with me in the near future. I'm currently in Vegas. I'm going to be here for a few days. So, actually, Z and Jay, I want to talk to you guys in the green room after this. But yeah, that's all I've got going on in the near future. And I don't know if we have a guest coming up this Wednesday. I know that one of our fellow members was trying to get someone, but I don't know if it's locked in, so I can't promise it. If there is no guest locked in for this Wednesday, Zenith, you want to do a fun and fancy Warhammer stream? And if we do have a guest, we can postpone it to another time.
Yeah, we can try to get something figured out for that.
Okie doke. Sweet. I'll have to come up with a series of questions and look up some Warhammer background, because I literally know almost nothing about it other than like Space Marines, cool stuff, and like orcs.
Well, I mean, Z, if you can, invite Henry. Maybe he'll want to join.
Yeah, we'll see if we can get Henry Cavill on. We'll reach out to him and see what he says.
Ooh, yeah. So I'll just whip out my phone real quick and text Henry Cavill, see what's up. Yeah. And then, because we've been postponing book club for this damn book over and over and over, I'm finally going to have a free Friday. So this coming Friday, we're finally going to cover the fucking book that there is no audiobook for. It's just a big, long PDF of a lady answering questions from readers. It is Miss Manner's Guide to Excruciatingly Correct Behavior. It's written very much in the same format as like Dear Abby stuff, but it's guided towards like general rules of etiquette. And the biggest thing is, doesn't matter what other people are doing, like just be courteous, be kind, and there is no polite way to be impolite. So that's the general gist of the book. But we're going to be covering that this Friday, once and for all, on DGen Roundtable Book Club. For those of you guys who have never watched the DGen Roundtable before, you can find our streams here every Wednesday, Friday, and Sunday, starting at 8 p.m. Eastern, here on youtube.com/@DGen Roundtable. Again, that's 8 o'clock Eastern, starting time, Wednesday, Friday, and Sunday. And with that being said, I want to thank you all for spending your valuable time with us here on the DGen Roundtable. As Agent Jay often says, we know that time is your most valuable asset. We appreciate you spending it right here with us. Ladies and gentlemen, my name is Will Stevenson, but more importantly, you have been watching the DGen Roundtable. Mrs. Producer, go ahead and get that trigger finger ready, because it's time to remind all the folks at home to remember to DGen responsibly.